Right. All right, so we're live again today. Thank you everyone for being here with us in the room. Thank you to all those who are watching on the live stream online. So I just want to go back to yesterday. Thank you everyone who was there at the Indian restaurant yesterday. I'm sure you liked the food like I did and everything. So thank you all. For those who are online, we'll be posting pictures so you'll be able to enjoy at least a little bit of that. I want to remind everyone that tomorrow there's a big barbecue, the biggest Bitcoin barbecue in the world. So we'll be doing that in the world history. We'll be doing that. Hopefully there's good weather. I think there will be, but let's still hope for that. Anyways, I'm going to jump directly on the subject of today, which is introduction to the Liquid Network. Today is kind of like DeFi on Bitcoin Day, so we're going to talk about things that a lot didn't think were possible, but are now possible through Bitcoin. It's not working out the screen share. Shouldn't be long. Single display. Okay, I think that's going to work. The slides are not working. Okay, shouldn't be long, we're just fixing this. Okay, so no, still nothing.
There's nothing on my screen yet.
Weird.
Oh, here we go.
There he goes. Okay, maybe I have just to take it and move it there. Okay, there you go. That's what it is. Okay, so introduction to the Liquid Network. Today's DeFi on Bitcoin Days. We're going to talk about the Liquid Network, but we're also going to talk about RGB later, which is a layer 3 protocol built on top of Lightning. It's actually Olga and Dr. Orlovsky coming from Europe that are going to call in later today after lunch and talk about RGB, layer 3, just the Lightning network, Bitcoin network, protocol stack. And we're going to finish the day talk about Atomic.Finance, which is basically allowing you to borrow your Bitcoins, to lend your Bitcoins and get an interest back while still maintaining custody of your keys. So really what Uniswap or like DeFi known protocols are really about on Ethereum, they're coming to Bitcoin. So to start with the Liquid Network, I'm going to go through first of all the concept of sidechains, then what is liquid, then what are the use cases. Issued assets is one of the use cases. We're going to talk about that a little bit. The wallets you can download to use the Liquid Network, Elements, RSK, Commerce Block, which are other types of sidechains. So to begin with the sidechains, so sidechains was an idea that was thrown around on 2014. It was released on a scientific paper led by Adam Back and kind of like the Blockstream founders. It was kind of like the initial Blockstream organization idea to work on sidechains exclusively, even though Blockstream is now mining, doing Lightning and all sorts of things. Initially, it was about the sidechain idea. What's the sidechain idea? Which was talked about a lot these days, and this was before Ethereum and everything like that came around. So the idea was that we could take some coins and put them on hold on the Bitcoin network so that they cannot be moved on the Bitcoin network. And while they're on hold, we can create another blockchain that can use that value in different ways, in more programmable ways, in faster ways, in more private ways, so with other features. So that was the idea. And when we were finished with using the Bitcoin in this blockchain that had like more features and more modularity, we would bring it back to the Bitcoin network where it starts. And this could be done in a two-way peg trustlessly. So, and this was really the key here. We thought initially that this could be done in a trustless manner, that you could go from one blockchain to another with the same Bitcoins without trusting anybody. But that didn't end up being the case. Actually, it's easy to go from the Bitcoin network into the sidechain, but what's hard, it's going back onto the Bitcoin network. And there's been a lot of discussions about upgrades we should do to make it possible, make it trustlessly possible, but we're still not there. So Blockstream naturally did what they could with the realms of possibility, which was doing a trusted two-way peg, so you can put funds on Liquid network, use the Liquid network, but when you come back, there's a trust issue. So then came Liquid network, and that was released around 2018. Liquid network is a two-way peg sidechain that's federated. So it means that when you send the Bitcoins, when you lock them on the Bitcoin network to send them to the Liquid network, it's controlled by a multi-signature contract that holds the keys to the funds. And who holds the keys to those funds? It's a federated architecture, so it means it's many organizations, many companies who together have come together, like 20, 30 companies have come together, they've created the Liquid network. So it's an enterprise governance. They could come together and they could decide really what's going to happen to the network. And this is the only way to do sidechains today on the Bitcoin network. If you look at RSK, which is another sidechain, or Commerce Block, the governance model is always going to be an enterprise model because, like I mentioned, the idea of this paper could not have been fulfilled technically yet. There's work, and it's called Drive Chain, to make changes on the Bitcoin protocol so that it will be possible to do. But then again, it's really, really hard to envision it, because what happens if the sidechain network becomes bigger than the Bitcoin network and you're doing trustless movements? Well, the miners of the Bitcoin network could tell themselves, hey, this network, this sidechain is now more valuable, it's more used because it's more programmable, it's faster, or whatever. So let's just sacrifice our Bitcoin network mining position and let's steal the funds from the sidechain. So that's basically what Drive Chain proposes, and a lot of people see it as a way to destroy Bitcoin, a consensus attack, and it hasn't been pursued a lot. So back to reality, we're stuck with the Liquid network, with RSK, with Commerce Block. And what's the Liquid network? Basically what they did is they took the Bitcoin protocol and they forked it and they added a few features, and they changed the mining governance system with a federated governance system. And that's really what Liquid is. It resembles a lot Bitcoin. It has the same blocks, transactions are the same, the blocks come at a certain amount of time, signatures are the same cryptography, it's all the same. The Bitcoin asset is there as well, it's just there's extra things. So what are those extra things? First of all, there's the question of the governance, which I talked about a little bit, which is that instead of having miners fight or just compete to have the next block, you'd have an algorithm that the federation signs every block. So every time there's a block, an algorithm randomly selects one of the 15 members of the federation, and they are responsible for creating a block. Once they, like a miner is on Bitcoin. But this is randomly selected by an algorithm. In Bitcoin, it's whoever gets the answer first gets to propose the block to the network. Then, after the federated member has proposed the block, 11 out of the 15 federation members have to sign on it before it's released to the network. So that's the big difference with the Bitcoin network. It's that, but it still requires 11 out of 15. So it's not fully centralized as when you're using, let's say, Coinbase, and you have coins on Coinbase, and only Coinbase is responsible for that. And if they get hacked, they get hacked. If they go away with the funds, they go away with the funds. And here you still require 11 out of 15 organizations. Every time, every minute, there's a block. And every minute, 11 out of 15 organizations have to sign onto that block to certify that, that it's a valid block. But at the same time, you can still run a liquid node. So anybody can audit the liquid network to make sure that they're not just colluding and being corrupt together, right? So anyone can verify the signatures in each transaction, the cryptography, the coin history, to make sure that nobody cheated really. So that's the governance system, but that's not the only difference there are. So there is the difference about the use cases regarding issued assets, the way you can issue assets, and the privacy feature, which are very important. But first of all, why this and why not Ethereum? Why this and why not another currency? But the reason is that the argument is always that when you create another coin like Ethereum, not only you are adding new technical complexities that you have to convince the public, or you have to make available for developers, and you have a lot of technical and security risks. Not only you're doing that when you're creating Ethereum, at the same time, you have a monetary system that you have to sell, that you have to gauge, and there's a lot of security and technical risk as well. So that's kind of what you're dealing with when you're creating a coin. You're dealing with the technical part of it, the technology proposal, and the monetary proposal. What sidechains are, it's a way to leave aside the new monetary proposal, not create a new coin, just use Bitcoin, but instead focus on the technology side of things and say, like, if we can do these things, if new blockchains come out and say they can do new things, well, why can't we just do it with Bitcoin? Of course, it's not fully trustless, but look around and look within the code base of other blockchains, other cryptocurrencies, it's not that far. So that's basically the reason you don't need to create another monetary system to create another public blockchain network. You can do it with Bitcoin itself. You can do a sidechain. So this is how the sidechain works, basically. Like I said, there's functionaries that are going to sign, and that's just going to get released. They're going to release every node to the green address, which are like the clients, the wallets people would use. So let's say you download a wallet. Every minute there's a node coming in, a block coming in through the node you're connected through the functionaries. In Bitcoin, basically these would be miners, nodes, wallets. But here we're changing a little bit to functionaries, nodes, and wallets. So what are the use cases and the features? The first, I'm going to start talking about the goal the Liquid was created for. Liquid was created for allowing big organizations like Bitfinex, like Kraken, like BitMEX to move around thousands of Bitcoins without people knowing. So what happens today, and if you're on Twitter, you've noticed it, you can, when people move $1 million, $10 million, or even more from an exchange to another, everybody knows it. And there's even like bot alerts on Twitter. You can see like, oh, $100 million moved from Coinbase to Kraken. It means something is happening, right? It means someone is selling or buying or just trading for another altcoin. So what the goal initially was for the Bitcoin movements to be hidden because of the privacy feature. So the privacy feature allows you to send and receive funds on the Liquid network while hiding the amount of Bitcoins you're sending. So you can send, there's no difference between sending 1 Bitcoin on Liquid versus 1,000. It all looks the same to people analyzing the transactions. You could reveal it, and there's unblinding keys that allow you to show it to the whole world, but if you just don't want to share it, if you want to keep a transaction secret between two parties and not disclose the amount, it's possible, and that's the main feature. And that's targeted for an enterprise audience. So that was the initial feature of Liquid. Inter-exchange transfers But it's also because of final settlements and 1-minute blocks. So first of all, blocks are not happening within 10 minutes, like on Bitcoin, around 10 minutes, because sometimes it can take up to an hour or even more. But there's no reorganization of blocks. So in Bitcoin, what can happen, and what happens actually a lot, is you get one confirmation on your transaction, then it goes back to 0, then it goes back to 1, 2, 3. Sometimes it's even possible for you to get 3 confirmations on the transaction, then it goes back to 1, then it goes back to 0. So why is that happening? Because of block reorganization. Because miners are not working together. They're all working differently, and they're all working in competition. So when miner A finds a block on the Bitcoin network, I could have found the block at the same time. Maybe I did 1 second after. I found the exact block. I was gonna get the 6.25 Bitcoin, but he got it. So what can I do to get 6.25 Bitcoin? It's a lot of money. What can I do on the Bitcoin network as a miner in that situation? What I can do is I can mine another block on top of my block, trying to beat the network, and I can propose 2 blocks at the same time and say, hey, this guy's block that the network is currently accepting is valid, of course, but I have actually another block built on top, so I have more proof of work, and by default, nodes accepted. So that happens on Bitcoin. Technically, it's possible to mine many Bitcoins, many blocks in secret and release them all at once. And if you have the most proof of work, you would win. So it's just to say that there's no final settlement on Bitcoin. That's why we tell you to wait 6 confirmations, because after that, it's probabilistically not going to turn around. But once you have 1 confirmation, it could go back to 0. It could be, that block could be removed from the blockchain. But instead on Liquid, since it's not a random competition, it's a federation, there is final settlement. When there is a block, that block is not gonna go away. People are just gonna build on top of it. So because of the final settlement, the 1-minute blocks, and the privacy feature that hides amounts, Liquid is good for inter-exchange transfers. So it means corporate transfers from big exchanges one to another. But ever since, there's been other features. So for example, issued assets, it's another feature. Issued assets is very similar as to Ethereum, where you can just issue tokens, and that's been used mostly for stablecoins. So Tether is on Liquid. You can use Tether. They have tens of millions of liquidity, maybe even 100 now. And you can transfer liquids, Tether on the Liquid network while hiding the Tether amount as well. So this is something that you cannot get with Ethereum today or other networks, is hiding the amount of the asset you're moving around. Not only Bitcoin, but Tether or any token you create. I'm not that interested in tokens, but it's just to say that it's possible. Also, Bull Bitcoin has created LCAD, which is kind of like a liquid Canadian dollar built on the Liquid network, but we're not using it for trading. We're just using it to allow users to withdraw their Canadian dollar balances. So anybody can go on Bull Bitcoin, have $3,000, price of Bitcoin goes up. They don't want to buy right now, but they don't want to keep their the dollars on the website. They can always withdraw the LCAD to their wallet and then deposit it back and buy Bitcoin later when they think the price is ready for them. So there's that. There's issued assets, but there's not only stable coins. Like BTC, which is btse.com, is an exchange. They've done an ICO on Liquid and they've raised like $50 million. So that's also another use case of the issued assets. Anyways, the confidential transactions, which was what I was referring as the privacy feature earlier, not only hides the amount, but it also hides the asset type. So you could be sending $1, 1 Tether, or you could be sending 1,000 Bitcoins. Nobody's going to be able to tell the difference because the asset type is hidden and the amount is hidden. They're going to be able to see the addresses that it's going from, That's not hidden. It's not perfect privacy, but you can hide the asset type and the amount. So later, which is what's going to come and what's really interesting, it's simplicity. And simplicity is very technical, so I'm not going to explain exactly how it works, but I'm still going to tell you what it can do. So, for example, there was this big debate, and one of the biggest debates in Bitcoin has been adding Taproot to the network or adding Schnorr signatures, which is just a cryptographic measure to bring like 25% more scalability, a bit of more privacy, some more programmability. Anyways, I'm not gonna go into the details of Taproot and Schnorr, but just to say it's been a like 12-month process. There's been a lot of conversations, debates, activation methods, and like even fights about this, because it's hard to bring changes to the Bitcoin network. However, if simplicity gets added to Liquid, and by the way, the goal is for it to get added to the Bitcoin network eventually, you wouldn't have to basically deal with everyone else on the network for a year to get Schnorr signatures or Taproot. You could just code it in simplicity. And you could just go on the Bitcoin network, if it has simplicity, code on simplicity, I want to use Schnorr, and boom, you can use Schnorr. So that's basically what simplicity allows. It allows for a programmability of a blockchain network like Bitcoin, like Liquid, and for you to add features just by programming them. Kind of like Solidity allows you to do modular stuff on Ethereum, but the lesson here that learned from Solidity's mistakes is that simplicity allows you to do that in a bug-free way by using functional programming. So for those who are software developers, you might know what functional programming is, but it's usually what we're gonna use when we write code for like airplanes. You know, it's not gonna be the same type of code for airplanes than for like web browsers, because a web application, who cares if it fails? An airplane, it's very important that it doesn't fail. So functional programming just allows you to verify whether there's bugs in your code before releasing it. Basically, it's not going to work if it has codes. JavaScript, what we use for applications on the web, it can have 1,000 codes it's going to run. It's not going to tell you. So that's basically the difference between simplicity and Solidity on Ethereum. It's that it's built on functional programming. It doesn't allow to do everything like Ethereum does, but it allows you to do cool stuff like adding new cryptography, privacy. You could basically write out Monero in simplicity. And you could add Monero to the Liquid network or Zcash, which are more advanced privacy methods that would require tens of upgrades on the Bitcoin network if it ever came to that. So simplicity is going to be deployed very soon on the Liquid network, probably in 22. And the Blockstream team definitely wants to get it on Bitcoin one day. That would mean years from now, but still, this is how it starts. So, like I said, there's an enterprise federation governance. That's a feature because if you're an enterprise, and I'm sure not many of you are, but if you are, you could join the Liquid network and have an influence in the development of the Liquid network. Which features should get added, which companies should join, or just deals and governance in general. So also what I wanted to say is you can build Lightning on top of Liquid. Since Liquid is basically a copy of Bitcoin, but with the mining functionality replaced by the federation governance and the issued assets and the confidential transactions added to it, you can still do basically anything you can do in Bitcoin. So you can build the Lightning network on top of Liquid. So it's not fully ready yet, but very soon you'll be able to send Tether on the Lightning network on top of the Liquid network, exchange it versus some Bitcoin, and do all sorts of crazy cool stuff on the Lightning network on top of the Liquid network. So, like I said, Simplicity's goal is to get eventually added on the Bitcoin network, because Liquid serves as a real life test bed for Bitcoin upgrades. It's a real network with real money, where people with a lot of money, where we can test features before putting them on the Bitcoin network without introducing another monetary system, while still using the same monetary system, so Bitcoin. Okay, so a lot of people have some critics about Liquid, and this is just a meme about that, saying oh, Liquid is just a way for banks to take over Bitcoin. It's just a joke, it's not real. Anyways, so you can use Green Wallet. I actually recommend using Green Wallet. It's the second wallet I've recommended to this week for mobile. The first one being Blue Wallet. Blue Wallet is very good, but it has a lot of features. But Green Wallet has some other features that are interesting, such as, first of all, Liquid network capabilities, but also just basic security. So you can add a two-factor authentication on your Green Wallet. So if someone, let's say, you're trying to get someone into Bitcoin and they're not technical at all, I would recommend going to Blue Wallet. If they understand what a two-factor authentication is and they already use that for other applications, recommend Green Wallet. It's great for that. It actually will protect a lot of money just from your phone by adding the two-factor authentication functionality. And for those who don't know, just briefly what two-factor authentication is, it's every time, let's say I enter a website, or in this case, Green Wallet, I'm gonna put my PIN, or my password, but it's also gonna ask me when I make a transaction, can you put your two-factor authentication code? And that it's a code that's generated every 25 seconds, or I get by SMS text, and that's basically how I need two factors to authenticate into my wallet. So Green Wallet is very good for that. It's good for Liquid, but it also has testnet, so you can use it for that. It's available on Android, iOS, desktops, so that's very good too. It has some cool Bitcoin features such as Store, so it's very private, even if you don't have your own node, but you can connect it to your own node. You can use it with hardware wallets, also on iPhone, just Ledger X, because iPhone is harder to connect stuff to it. So there's all sorts of features with Green Wallet. It's a very recommended wallet. I'd say that the iOS version is a bit slower and less maintained than the Android version. So just keep that in mind. I was initially using Green on iOS. I've switched to Blue on iOS just because it's not as good. Green is not as good on iOS than on Android. So there's also Aqua. Aqua is a new wallet by Blockstream that's like reducing complexity and abstracting complexity from the Green Wallet. So Aqua is very easy to use. If you have friends that want to get into the Liquid network because they want to use Tether or they just want to test it, but they want the complexity abstracted away, Aqua is a good way to do it. However, it's only available on iOS today. So that's it for the slides, but we're going to surf the web, and I wanted to show you a few things. So this is the Sidechain paper. You can go on blockstream.com/sidechains. I don't advise everyone to read it since it's very technical, but for those of you that are further down the technical path, if you want to read it, go ahead. You can find it here. So here on the Blockstream website, you can find Aqua, but you can also find Green, so you can download it from here. Blockstream has all sorts of products. It's not just Sidechains at this moment, but you can find it from here. I wanted to talk about RSK. Where is RSK? Okay, Marine is another wallet for Liquid. This one's different because you can have it within your browser, so it's available for Chrome now. Basically, it's just a browser extension that would allow you to have some Liquid, Tether, Liquid Cat balances directly on your browser. Some people prefer that. Okay, so RSK. RSK is very different from Liquid in the purpose it has. So Liquid, like I said, if we're going back to the initial purpose, it was about inter-exchange settlement, fast settlement of large transactions with privacy. So Kraken sending $10 million worth of Bitcoin to Gemini and no one knowing about it. And settlement fast, no one knows about it, and it cannot be reversed. It's final settlement. So that's liquid. And then they added tokens, and so now you can exchange like stable coins, but with very low programmability. And they're gonna add simplicity, but once again, it's functional programming, so it's limited programmability. RSK is completely the other way around. RSK is the exact same thing as Liquid on the governance model. It's a federation as well. But RSK implements the Ethereum virtual machine, so it's fully compatible with Ethereum smart contracts. It's a sidechain of Bitcoin that can run anything that Ethereum runs on the Bitcoin sidechain. And of course, it's not as used as Ethereum. It's not as developed as Ethereum. It doesn't have all the apps, but it's compatible. And it has a lot of backing, a lot of funding, and a lot of development anyhow. So that's RSK. RSK also gets a lot of its security, not only from the functionaries, but from the Bitcoin mining network. So RSK wants to move to DriveChain. If you remember earlier, I said DriveChain is a proposal to make it completely trustless and not need a federation. RSK wants to go from the federation model into the DriveChain model where it's trustless, where you don't need to trust third parties. So one of the ways they're doing that, not only supporting the DriveChain proposal and working on it, they're also allowing the Bitcoin miners to merge mine RSK. So around 60% of the Bitcoin network miners are also in hash rate are merge mining RSK. So it's actually very popular. And what do they get when they're merge mining? Well, what they get is the transaction fees of the RSK network. When you get and that's basically split between the miners that merge mine RSK. RSK has stable coins on it, it has DeFi on it, but it has not as high volumes than Ethereum. That's for sure. But there's new things being developed every day, and you can find all their information on their website, rsk.co. To be honest, I'm not that interested on RSK since it's very close to Ethereum. It just seems to me that most use cases revolve around trading, and I'm not that personally interested in trading, but it is out there, it is for people to try it, and it can have potential. So another one that's like the third sidechain basically of Bitcoin is Commerce Block, and Commerce Block is the one that gets talked the less because it's not very clear to everyone what it's doing. They've changed paths many times throughout the years. I know that they can allow you to, once again, issue tokens and have a blockchain structure to like allow users to audit the transactions. Because keep in mind this, Bitcoin is good for auditability, but you can also mine it. You can be part of creating the history. You can store some coins. For the long term, you can exchange coins, Bitcoins, and there's use cases in all of that. Liquid doesn't allow you to be a miner because you'd have to be a federation member, but you can still audit the transactions. So blockchains have a use case in allowing the auditability of data. It's a limited use case. It's not a revolution as Bitcoin is, but you can still do it. So Commerce Block, as RSK, as Liquid, inherits those blockchain properties of auditability, and that can be done through running a node, or it can just be done through looking through Explorer, which honestly it abstracts complexity. It can also lie to you, but a lot of people just trust the explorers. So what have people built on Commerce Block? CoinShares, which is a UK-based company, if I recall correctly. Now it's listed on the stock market. It's listed at like 1.5 billion value, so it's pretty big. I think they're in like OTC, but also custody. They've released a token on Commerce Block that is like a gold token that you can buy, and there's gold in a vault, and you can audit a few things of it on Commerce Block, but it's not trustless. There's nothing revolutionary here. It's just a financial instrument that allows them to program. It's really that. But what's interesting about Commerce Block is that they're starting work on, they're starting block on state chains. So Mercury is a state chain implementation. And for those of you who are from the back all days in Bitcoin Montreal, I presented state chain like 3 years ago when it was just an idea. But Commerce Block has already started building state chains. State chains is very hard to explain. Basically, state chains are like a form of sidechain and Lightning mixed together. It's a way for us to swap coins. That's really what it is. Instead of me sending you coins directly on the blockchain network, or me and you locking funds and exchanging those funds on another blockchain network / a sidechain, a state chain is me swapping the coin with you off chain. So and there's many ways to do it. But anyways, Mercury is a state chain implementation that allows you to swap UTXOs with other people. So it's private, it's scalable. It has some trust components. Anyways, so Commerce Block is very interesting because development work they're doing on state chains and side chains, amongst other things. I'm gonna finish by talking about TDex. So TDex.network allows you to today download on iOS, on Android, and allows you to, basically a decentralized exchange built on Liquid that allows you to exchange by atomic swaps, Tether versus Bitcoin, LCAT versus Bitcoin, or whichever token versus whichever Bitcoin on the Liquid network. And it's available today. I tested it once. It's pretty cool. But of course, you can only atomic swap Liquid tokens and LBTC. But still, I'm sure some people will find use cases to it. And once Lightning is fully ready on Liquid, it's going to be pretty cool to have those atomic swaps done on Lightning instantaneously instead of waiting like a minute. It would be instantaneously, any amounts, no fees. So yeah, just to go back to the state chain, now that I think about it, state chain. So basically, when we're making transactions, I'm really sending coins to an address you control, and that's how you get control of an address. But a state chain is a swap of a private key with a third party by encrypting the information by using multisig. So basically what I'm doing here with a state chain is I'm sending you my private key, and the coins are not moving. I'm just sending you my private key of a multi-signature scheme, so you cannot control the funds completely. You would need the funds of the third party, but the third party cannot, it's all blinded. It uses blind signatures. So once again, it's very complex, but a state chain allows me to send you a private key and for you to take control of some coins without like counterparty risk between us while hiring a state chain server, but the state chain server cannot see anything that's happening because everything is using blind signatures. So that's what a state chain is. Anyways, back to Liquid and sidechains. You can use TDex. I also added here the latest simplicity article, so you can find it on the engineering blog of Blockstream. Here they're exactly talking about what I was saying, using simplicity to add Taproot to the Liquid network by coding it on simplicity, rather than making a protocol change, a protocol upgrade, and having to deal with it for months. Simplicity allows you to code these type of upgrades, cryptographical changes directly on the blockchain network. So that's pretty much it for the presentation, and I'll take questions for now. Thank you. Okay, I know it's a very hard topic, and today, to be honest, today is going to be like that. RGB is going to be even harder, but I can answer any questions you might have.
Thank you, Gustavo. I've got a couple separate questions, if you don't mind me asking them
Of course.
in between you answering. The first one, going back to Liquid. Well, both are going to be Liquid actually, but could you expand on what is a federation as a governance system, and perhaps how does it differ from other governance systems such as proof of stake and the popular ones like that?
Okay, of course. So I guess for that I would have to explain proof of work very briefly, and then I'll go just from protocol to protocol. So proof of work is about, what's the goal of proof of work? The goal of proof of work is about reduce, and this is very hard for people to understand. It's not very explained, but in my opinion, proof of work goal is to limit the spam capabilities of Bitcoin nodes on other Bitcoin nodes. Okay, so basically anybody can propose a Bitcoin block because it's decentralized, right? There's no elected officials that can propose a new set of history. Technically anybody could, but what if anybody can? It means anybody can just spam everyone else. And on the Bitcoin node network, and any node can just say like, hey, I have the next new block, and say that 1 million times to each node. That would just create what's called DDoS, so denial of service. It would just make nodes crash because they would just receive too many requests from a single node. Saying like, hey, I have a new block. And it would just make nodes crash, and just the strongest nodes would remain, and they could take over the network. Instead of allowing anyone to propose a block, what the Bitcoin network says is, before you propose a block to me and I read 2 megabytes of data, I'm just going to read 500 bytes of data, just a little cryptographic hash. Just going to read the cryptographic hash, which is the mining answer, and that's going to prove to me that you did the work to propose a block. I'm not going to waste my time reading 2 megabytes of data, a long list of transactions, if I'm not even sure you did the proof of work, which would cost to you today $100,000 on average. And if you're lying to me on the transactions that I'm going to see after I verify that the hash is valid, you're going to lose it if you've cheated, right? So that's basically what the Bitcoin network is. It's just making it hard to propose a block by defining the key to open that door to propose a block as a cryptographic hash that can only be obtained by trial and error through mining. That's going to cost at least $100,000 in electricity and miners. So that's really what it is. And proof of stake there's different models of proof of stake. So there is DPoS, which is delegated proof of stake, and there's just regular proof of stake. Regular proof of stake hasn't really worked so far. Okay, it's very theoretical, but the premise is that it depends on the network once again, but the premise is that anybody can be, instead of having miners that are spending electricity anybody can just run a node and be like on like proof of stake mode, staker mode. And sometimes they would require to put some coins, usually it's that. They would be required to put some coins. Let's say in Ethereum, it's gonna be 32 Ethereum. So you're gonna have 32 Ethereum on the wallet, on your node. Let's say everybody has that. And the network would randomly select one of us, but anybody can join. Anybody that has 32 Ethereum can join. So it's not closed, it's open to anybody. And you're gonna propose a block and all the nodes are gonna then validate it. It's not that different from a federation system, to be honest. And if I lie and let's say the network catches me lying, cheating on the block that I've constructed, I would lose my 32 Ethereum. So that's how you get like a risk for the cheater, right? Because that's the goal. It's to make it hard to cheat. And if you're cheating, to be severely punished. In Bitcoin, if you cheat on the block that you've proposed, you're lying, you would lose at least $100,000 in electricity because you just lost your proof of work. And Ethereum, you would lose your 32 coins. And that would be the punishment for cheating. But anyone would be able to become a node. And it's more complicated than that, but let's just say that that's kind of the idea behind it. Delegated proof of stake is we hire some people to be like 21 delegated members, 21 delegated nodes, like EOS, for example, and those 21 are the only ones that are gonna verify, construct the blocks and verify them, and they can punish each other, like if one of them is cheating, but they can collude technically together. So that's EOS. Or like networks very similar. Tron, I think, works the same. It's a public network, but you elect people. And the problem with electing people to like control the governance, to decide the future history of transactions, is that you get, we've seen it. This is how our society works. We vote, we elect politicians. The problem with doing that on a blockchain network is, and we've seen it on EOS and Tron, is that people just start buying votes. And so the same, or some organizations have many elected nodes of the 21 elected ones. They would pretend they're different persons, but they're the same. So we found that EOS was actually 3 organizations that could meet, that could make deals between them. They were, in paper, they were 21 organizations. They were buying votes, and they were colluding between them, and they were actually 3 people. So that's what you get in EOS and delegated proof of stake systems. So Liquid is not that far from it. Liquid doesn't have the election system, which is very fake on other networks because you can buy votes and you can run as an elected node many times and just be the same person controlling many nodes. So Liquid removes the fake election parts, and it's a closed community. It's not like proof of stake on Ethereum would be, or mining. It's just federation members. But there is different roles a federation members can have. So first of all, the first role would be just being a member of Liquid, like just being on the conferences, voting on the stuff, but not participating on the technology stack, not participating on the blockchain. That's one role. And let's say Bull Bitcoin is a Liquid member, but we don't run a Liquid. We're not a Liquid functionary, and that's the difference. Functionaries, there are 15 functionaries out of the federation members, and federation members there's like 70. Out of the 15 functionaries, like I said, 11 are needed to sign blocks, okay? So those 15 functionaries, they are part of the members. I don't even know who they are. Blockstream is one of them. They're elected by the federation they're geographically distributed, they're different organizations, they are pseudonymous on the blockchain, so you cannot know that this block is being mined by Bitfinex and go hack Bitfinex. It's cryptographically hidden. So, and there's also the watcher role on Liquid. Watcher role is not to create blocks, as the functionary is. It is to watchmen, we call them actually. It is to watch the funds that are locked on the Bitcoin network that allow for LBTC to be issued. Because you remember, like I said, when you create a sidechain, you take funds from the Bitcoin network, you lock them, and you issue the same amount of LBTC that is locked. So the watchmen are other federation members that are in charge of controlling the multi-signature wallet that holds those funds. And that's basically the roles in Liquid.
Then another question I have for you is, you were speaking about how one of the features of Liquid is hidden, well, the possibility to have hidden amounts and also asset type. And how does that transpire to the auditability model of Liquid? Like, because well, if you're auditing the chain or for the nodes to audit, and that is hidden, does that have implications?
That's a very, very good question. Okay, so this question and this answer not only applies to Liquid, it applies to any blockchain that has privacy features. So Monero, Zcash, anyone that has privacy features, the question always comes around. How can you be private on a blockchain level, but at the same time allow people to audit the supply, audit that people are not cheating? How can you do it? So there's different technologies for that. One is called confidential transactions. Another is called zero knowledge proofs. Others are called range proofs. There's something even called bullet proofs. But they're all based on the same concept. Okay, the concept is that, and the vulnerability that comes with it. The concept of confidential transactions is that it's that if you have the signature to move funds, even though you're hiding the amount and the asset type, if you have the cryptographic signature, you're able to produce a range proof, a proof that says it can either it's between this hash probabilities. So like it can be, there's another option, like it can be true that the person that moved the funds control that. It's most likely that, but it's not the only probability. It's possible for people to invent new cryptography and basically break the privacy of Liquid, of Monero, of Zcash, of any blockchain complete privacy feature. It's possible for them to invent new cryptography. We don't know that cryptography yet. It doesn't mean that people cannot invent them and break the privacy of Liquid. That's technically possible. But when you use confidential transactions, you can do it in two ways. One is if there's a break in cryptography. One is you can break the privacy. The person that has invented the new cryptography can break the privacy and see the coins of everyone. The other is the person can not only view everything, they can create coins out of thin air. Okay, so this is the reason why confidential transactions was never added to Bitcoin, and why it might probably never be added. Because if you're adding it in the way that Liquid did, if someone breaks the cryptography, they're gonna be able to see everything. And if you add it on a different way, let's say like Zcash did, you're gonna be able to create coins out of thin air. So that's why I never recommend anyone to use Zcash, because how do you know no one has created a billion coins and is just using that and hiding it at the same time? You cannot know for sure. So that's basically the risks that are involved here and are involved for each privacy coin And that's the reason why on the Bitcoin network, we've never made those types of upgrades. There's other ways to get privacy, like we explained, Wasabi. That's very, very different. That's not on a blockchain level. That's just mixing transactions and playing with them. But privacy at the blockchain layer is extremely dangerous. Any other questions? I'm gonna check. There's one right there.
Does the Taproot upgrade will bring innovation on the liquid and the federation model?
Will the Taproot upgrade bring that? Not that I can think of, not that I have read either. I would like to say that Taproot was added to Liquid before it was added to Bitcoin. So actually it's not even added on Bitcoin yet. It's gonna be added on Bitcoin in about 2-3 months. It's voted in, so it's gonna happen, but it's not added yet. On Liquid, it's been added. It hasn't changed anything. I don't think there's a reason why it would. Taproot is really about adding privacy for scripts that have multiple conditions. Okay, when today you have a script with multiple conditions. So for example, let me give you an example. If I make a Bitcoin transaction and I make it in a script, you can do that. And the conditions are either my address can move the funds out of here anytime, either after a year, Macheg's key can move the funds, or after 5 years, anybody can move the funds away. You can write that on Bitcoin today, okay? Let's say the first thing happens, the first condition happens. I move the funds. Today, I would have to reveal to the whole network that there were 3 conditions. Even though I only executed the first condition, I would still have to let everyone know of all the conditions. What Taproot adds is that I'm not going to reveal the conditions that I didn't execute. I'm only going to reveal to the network the condition that I executed, and all the other conditions, and there can be thousands of other conditions, they're going to remain hidden forever. So that's the difference and the advantage of privacy that Taproot adds. It's to hide conditions, script conditions that you don't execute. But no, for the Federation members, it doesn't change anything. Does anybody else have other questions? Nothing? You have one?
So, you know, as a Bitcoin maximalist, we often gonna criticize tokens, and now as Bitcoiners, we're creating we have the possibility of creating tokens on federated sidechains. So, how do you deal with that factor? Basically, kind of doing the same thing that we're criticizing. So, what are the differences here compared to the other blockchain networks, I would say?
Well, that's a very good question because it was always like you said, it was always the talking points of many Bitcoiners was that tokens are a scam. And don't get me wrong, most tokens are a scam, but you still use the Canadian dollar when you pay today with your credit card. I'm sure most of you do, or other fiat currencies. So I've mostly presented the models of stable coins on Liquid because whether we want it or not, they're being used more than anything else. If you look at the Bitcoin trading pairs, more Bitcoin is being exchanged against Tether than against anything else, and even against US dollars. So more people are exchanging Bitcoin with Tether than withdrawing to their bank account or buying funds. That's what the Bitcoin economy is about today. And yeah, we can criticize it, but that's just the reality. So that's one side of it. Another side of it is that you can issue stocks. I'm not that interested in STOs, but there's still a difference between an STO, a security token, which can have different levels of advantages. It can share revenue, it can share dividends, or it can just allow for a cheaper fee, like with like the exchange tokens. it allows you to save on fees. There's real use cases. Like for example, I've talked to, and this is not very Bitcoin maximalist. Some people might criticize me for it, but I just think it's the truth. I've talked to traders that have trading firms that trade $100 million each day, okay? And when they go on Binance or Deribit or FTX or whichever exchange they're working with to make market making, because when you buy coins, there's usually a firm that's paid to put liquidity there for the price not to go too down or too up, right? That's just how every financial market works. When a firm is putting $100 million of liquidity to market make on a big exchange, it's paying $50,000 in fees or $100,000 in exchange fees very often to the exchange. Yes, they're making money on other ways, but they're still having a big expense that can be tens of thousands a day, when just by using the Binance token, they save on that. Okay, sure, Binance can print that money, but there's a use case there, okay? So people are saving money in there. So even though I'm never gonna say that you should do a utility token or those kinds of tokens that have no use case and are probably always scams, there's other use cases that market participants have shown real business interest towards. So I find it hard to just dismiss it all. So I'd say for those use cases, Liquid can work, and the main scam is in the utility tokens. Yes, in most cases they are scams. In basically every case, a utility token is a scam. But when you're using a ERC20 token, you're also using Ethereum. You're using another monetary system that really has no use case. In this situation, you're not using another monetary system. But like I said before, this is not the revolution. This is not why I'm here. I'm here because of Bitcoin. But this is just a side effect and something that comes with it. They're gonna have 10% just upgrades on like real life use cases. You can make business use cases out of it, but it's not the revolution. The revolution is Bitcoin. The revolution is the unseizable, uncensorable features of Bitcoin. The fact that the money schedule of emission cannot be changed. Those are the reasons why I'm here, and that's the real revolution. But this can work in business situations like I explained, and it can work effectively against competition. Another question? No, it seems there's no other questions. So anything you guys want to see other I can show? Maybe you guys want me to show some other examples of this technology. Yeah, there's two questions or comments in the back.
Well, I'm interested to know a little bit more about DeFi on Bitcoin. You showed the TDex, or can't remember what it was, but can you elaborate more about this?
Yeah, sure. So the question is about DeFi on Bitcoin. So I'd say that I'm going to talk about TDex, but just to say about that, what really DeFi is about creating often finance and lending contracts on Bitcoin. So Liquid doesn't allow for that yet, although there's people working on it for finance and lending contracts. But we're going to see Atomic.Finance later today. We're going to see RGB later today as well, which RGB is at the development phase of a technology, of a science that in many years is going to allow for financial markets to develop on layer 3. But Atomic.Finance is a real use case that's going to be live in beta now, that's going to allow you to make real DeFi on Bitcoin. So I just wanted to precise that. But TDex, basically what it is a decentralized exchange that people have developed that allows you to exchange any type of asset that there is on the Liquid network. So like people go on DeFi on Ethereum for lending and borrowing, but they also go for exchanging assets without trust. Of course, there's always some trust because you got to trust that the Ethereum protocol is trustless. You got to trust that the Uniswap protocol works. There's definitely a lot of trust involved. And in this case, again, it's running on top of Liquid which is a federated system. So the TDex is a big word, I'd say, but TDex today allows you to exchange all the assets on the Liquid network between themselves. So you can exchange Canadian dollars with US dollars without KYC, without any registration. Just download an app, you get some BTC or some Tether, Liquid Tether, and you can exchange it without KYC, without any personal information, with other third parties, with other counterparties, without a third party, just by doing atomic swaps on Liquid. Because it's possible to do atomic swaps on Bitcoin. It's been possible since a while. But people were always trying to achieve atomic swaps across chains. So from Bitcoin to Ethereum, because of the stablecoins on Ethereum. But since you can have stablecoins on Liquid, and you can have Bitcoin on Liquid, you can exchange that on TDex. And what I'd say extra about the assets, like the stablecoins versus Bitcoin, is that we've understood so far that the Federation has a lot of power. Technically, the Federation can issue more Bitcoin than there is on this multi-signature contract. Technically, they could create Bitcoins out of thin air. It's very unlikely, but if they would all collude together, they could do it. But what they can never do is, unless they just discover new cryptography that breaks the confidential transactions system, which would break Monero, which would break many other systems, would be a big cryptographical breakthrough. But unless that happens, and that can happen from anyone, not only Federation members, unless that happens, which I don't think is going to happen anytime soon, the assets that you're sending one back and forth, and the fact that you can hide the asset type and the amount type, nobody has a special right on that privacy. The Federation members don't know the amounts you're transacting or the asset type either. As no one knows, the Federation members don't know either. So that's very interesting because, yes, when you're using Bitcoin, they can, they have control of a multi-signature Bitcoin scheme. They could take away those funds. They could inflate the Bitcoin supply on Liquid, which once again is very unlikely to happen, but they could never touch your asset contracts. They could, first of all, never issue your assets because they're issued by your private key. And also, they could never see the asset type or the amount of each transaction. So right now on TDex, you could exchange assets or with LBTC, and you can hide the amounts and you can hide the asset types, and no one on the network knows, and the functionaries, they don't know, they cannot break it. There's really nothing they can do besides censoring all corrupted together, and everyone else that runs a node would know it. So honestly, the incentives are not there for them to act maliciously, and in most cases, like disclosing the asset type and the amount, they won't know it. So that's what I find interesting about TDex, is that it allows you to leverage those features with atomic swaps. If you're about to use stablecoins, that I would say is the main feature. If you want to use stablecoins versus Bitcoin, you just want to, let's say, Bitcoin price is going up, Bitcoin price is going down, you want to hedge yourself, you can use that. But in the future, you're going to be able to use other tools. And tonight we're going to be talking about Atomic.Finance, which I think is going to be the closest tool to doing real DeFi on Bitcoin. I checked, there's other questions in the back. Okay, so I think this side was first, just sir here, but we're gonna go for the other one.
So the part that I'm a bit confused about is, you mentioned that the Liquid sidechain has the same amount of LBTC as so like 18.8 million. But there's no way that that amount is locked in. So where are all the other LBTC? Like, are they kind of just, they haven't been materialized at that point?
That's a very good question. I apologize, I might have misspoken. What I meant to say is that every Bitcoin that is locked on the Bitcoin liquid contract, on the Bitcoin network, that is sent to the multi-signature wallet that the liquid functionaries control, all those Bitcoins are issued on the liquid network. And today it's around a couple thousand Bitcoins. And that's all the LBTC supply there is. And when you go back, when you want to remove the Bitcoins you send to liquid, it gets removed from the supply as well, because you get it back on the Bitcoin network.
Kind of like how Tether works, I guess.
Yeah, kind of like how Tether works, but the difference is Tether is an audit by a legal company saying they have this many amount of treasury bills and like financial instruments, but it's a contract that it's verified by a third party. The difference is that liquid, you can see the multi-signature wallet on the Bitcoin network. You can see the funds on the Bitcoin network. You can see that they're really locked there. And you can see their issuance on the liquid network as well. Because when they issue LBTC, it's done unblindly. So you can verify the amounts that are being issued. And when they're going back to the Bitcoin network, you can also verify the amounts. So it's very different in that sense. You can watch it with your Bitcoin node. You can audit that with your liquid node. You can audit that. And on Tether, you cannot see what they have on the bank account. You can only trust that the third party that has audited their bank account is telling the truth, which probably they are, but it's trust. So yeah. Another question there was right there.
I have a question about TDex. Is it like, do you know where the liquidity comes from? Is it an AMM system, order book, or I just get a quote from the website?
Well, from what I understand, it's peer-to-peer. So there would have to be liquidity on each side for trades to happen. We're not at the level of advanced market making or like rebalancing algorithms like there is in Uniswap nowadays, which are honestly very effective. But there's nothing stopping anyone from going on TDex and providing liquidity and probably figuring out a business model. Maybe the TDex people are already providing liquidity and figuring out a business model at the same time. So, but from what I understand, it's peer-to-peer. Maybe there's not a lot of liquidity right now, but there can be. It's a tool that's out there for anyone to jump on, to be a participant. From what I understand, also Francis Pulio did a review of TDex. What he really liked particularly was the vision of and the values that the TDex people are trying to share, you know. And you can also find it on just, let's say, the privacy policy of the website. The way it's written, it's very privacy protected. It shows that it's people that are into privacy protection that are running this. So that's interesting, right? Because you don't want to start using a tool like that, start developing a community like that, and then like Uniswap, the regulators come and say, we're gonna decide what's gonna happen here, and boom, from the night to the day, you start seeing changes on the application. You don't want that to happen. So, and like I said, these things are not completely decentralized, and that's the case for every other blockchain protocol and application. And the regulators are gonna come because there's new laws, or because sometimes, like Uniswap or things like that, they really fall under the definition of securities dealers. So, but I would be surprised if they're able to get a hold of this. But even then, it's nice to see that it's run by people that care about these values at least a bit. Any other question? Okay, one last time. Hold there.
So then, just judging from the structure of Liquid that you described, it doesn't seem like it'll ever have a more like mass adoption as say Lightning might have. Can you just sort of comment on like where Liquid has advantages over Lightning and you know, just whatever you think is pertinent in the comparison?
Of course. That's a very good question. Liquid versus Lightning, and what's the future for each one of them. So it's a different target market, that's for sure. This is not for everyone. Lightning is for everyone, is what I would say. Lightning is not for everyone yet, and of course, if Bitcoin fails, it's not for anyone. But Lightning right now works for like people in Salvador, like we saw Nicholas Burley talk about the other day. It's already working for just regular people making transactions, buying, selling stuff, offering services, just as regular currency would. For us, I think for me, if Bitcoin succeeds and Bitcoin goes to bigger value, and I'll start spending my sats, I'm gonna use Lightning because Bitcoin network fees are gonna be high. Lightning's gonna work. I'm just gonna use Lightning. So in that sense, it's for me and for everyone too. But Liquid, like I said, you would first of all, it's good for privacy. Like that's for sure. You can throw LBTC within Liquid, use the confidential transaction feature. There's even coin join coming to Liquid. So you'd be able to do a coin join in Liquid while the amounts are hidden as well. That's very powerful. And you could get out with like a no KYC swap tool that gets you back BTC. And that's very powerful. So you could use it as a mixing tool. And we know now that was like people say like, but that's niche. Not really. Wasabi wallet, it's one of the biggest businesses in Bitcoin. It trades over, last time we checked, it traded over 50,000 Bitcoins a month. And they get like 0.3% in profit. That's a lot of money. It's way more than how the wallet manufacturers. It's almost as much as exchanges make. So privacy is a very big business. That's one use case. The other use case is for those that want to trade, for traders and for trading organizations. Like I said, BitMEX sending $100 million to Bitfinex. They don't want people to see that. They could be using Liquid. So that's, well, like that's an enterprise target market, but it's still there. And for just regular traders that in the future don't want to KYC everywhere and use fully non-private methods or like fully trusted methods, they could use stuff like TDex and exchange BTC versus USD versus CAD versus like maybe someone will issue a Tesla stock on Liquid. I'm not a trader, and many people, and traders are not most of people, but there's some people. So like I said, it's for traders, for privacy-seeking individuals. It's one of the ways to get privacy for your Bitcoin, and it's for large organizations that are settling financial markets on Bitcoin. But that's what it is, and maybe we'll see other use cases, but that's what it is right now. And Lightning is for anybody in El Salvador that doesn't have a bank account that wants to use Bitcoin, and for if Bitcoin succeeds, really, it's going to be for me and for everyone here. So that's what I'd say is the difference. Yeah, check.
I have a last question. So what would you say about the conspiracy about Blockstream that has taken over Bitcoin, and it was all a big plan with Segwit and you know, the reptiles, and they basically controlling Bitcoin? A little bit more.
Like this image right here?
Yeah.
Yeah.
Can you say where is it coming from? And
yeah, I can talk about that. So it's not false what he's saying. Like, there's people that really believe that this was all a plan by Blockstream. Blockstream controls Bitcoin. It's a joke that people think they're reptiles, but it's like taking it to that furthest extent. And Blockstream even makes fun of that by dressing as reptiles. But this started really when the block size war happened, okay? So when the Bitcoin Cash camp, before it existed, they were controlling like subreddits. I think the BTC subreddit was their main asset. And the Bitcoin subreddit was like the Bitcoin core developers' main asset. And for years there was a fight that started around 2015, where exchanges like Coinbase and blockchain or big companies, miners, they wanted to increase the block size. Because if there's more blocks, more transactions per block, they can make more money, they can move money faster, their transaction fees goes lower, so their expenses go lower, there's more throughput, so they can get more funds in their exchange. It's just better business. And the miners, it's better business, more transactions, means just more individual fees, so more collective fees, since there's more transactions. And there was a heavy discussion on internet that lasted about 3 years. And that's when the theories about Blockstream came around. Because, to be honest, there was a lot of censoring from both parts, like there always is in any internet debate. People start trolling, people start insulting themselves, they get banned out of Reddits, and then when they get banned, they're mad, they go to their subreddit and they say like, these guys are mean, they are censoring me. So it's that, but it's also the fact that the Bitcoin network its vision is for it to use complementary networks. That is really the vision. Like, if we're gonna go to scale to a lot of transactions per second, we're gonna use Lightning or other similar protocols. Even though it's not necessary, like Bitcoin works already. The Bitcoin network works, it's being used. It's not that expensive yet. And it moves so much money around. It moves way more money than PayPal and even Visa, I think, in value today, in trillions of dollars. So the Bitcoin network works, but if we're going to move it to millions of transactions per day, per second, we have to get Lightning on or complementary networks, since the base network is the settlement layer. So a lot of people were saying like, Blockstream at the same time doesn't want to increase block size. At the same time, they're selling Liquid and Lightning as complementary networks. They're like, if they weren't selling Liquid and Lightning, they would want bigger blocks. But the guys that wanted bigger blocks, they wanted it for their business reasons too. And it's not a business reason that closed the debate. Usually when people say that, it's because they cannot accept or they cannot understand the reason why blocks are small. And the reason is simple. If you increase, there's two reasons. If you increase, the first one is, if you increase the block size, you will make it harder to run a node. Not necessarily today, but in a few years. You would go from, right now the Bitcoin blockchain data is like 500 gigabytes. It grows at like 100 gigabytes a year. If you increase the block size, it can grow by 10 times. It's going to go about 1 terabyte a year. Nobody has that much of amount of bandwidth, or not many people do. You would go from 200,000 nodes to 10,000 nodes to 1,000 nodes to 25 nodes, and those 25 nodes would meet on a room like this and decide everything together. And that's basically the opposite of what Bitcoin is. Bitcoin works because, like I said, miners propose an answer to the equation, and with that they propose an addition to the blockchain history, but nodes can still refuse that and make them lose money if they're cheating. So that's the difference with Bitcoin and every other blockchain network, but also every other financial institution. And that's what makes Bitcoin really decentralized. But that's not only that. It's not only about increasing block size. When you increase the block size, you change the consensus rule. It opens the door to changing consensus rules. If today we change block size, Why not tomorrow we change the mining algorithm, and the day after we change 21 million for 22? It's the door is open towards making changes. So the answer of the debate, of the investigation was, no, we don't want to increase block size. We don't want to make hardware forks that are going to be making protocol changes that with that many implications. We're just going to be very conservative. And that's what basically smart Bitcoin companies understood, and they developed their business strategy around that, not the other way around. So I would say people saying that the Bitcoin is running small blocks because of Blockstream's ambition, I would tell them to read the Block Size War book by BitMEX, which talks about that a lot. And the conclusion is clear, like Bitcoin works, and because of that, because we don't change the rules, because you can trust that we cannot change the rules, because you can trust that there's 21 million Bitcoins. If you cannot trust that, even if there is 21 millions, if you cannot trust it, it's not gonna have the same value. So that's the difference, and that's the reason why we do it like that. Any other questions, or should we go for some pizza? That's not a hard question. Okay, thank you everyone. Thank you everyone on the live stream. Thank you everyone on the live stream. We're gonna be going back for lunch. We'll be back in an hour. Thank you. Live now. So we're back here after lunch. We had pizza. Now we're going to talk about Pandora Core's technologies. So for those who don't know, Pandora Core is a Bitcoin company that's based in Europe. They're developing layer 3 solutions such as RGB tokens, which is a way to make tokens not on a blockchain like Liquid I was showing this morning, but on off-chain, on the Lightning Network, or on top of the Lightning Network. So that's what RGB is about. And we're gonna have Olga and Maxim, Dr. Maxim Orlovsky, joining us from Europe to present RGB and other Pandora Core technologies, such as Spectrum or other names I don't remember right now. I think Typhoon, something like that. But anyways, it's gonna take us a couple minutes before they join us in. We're ready, but they're not here yet, right? Not yet. Okay, so it's gonna take maybe 1, 2, 3 minutes for them to join. But briefly, they've been working on this for a couple years now. They've started work, I think, in 2018, 2019, around this. So pretty much early days. It started with like academic papers. These people are very academic, so they've been studying this in European universities, releasing the theory, then writing the code. At the point we're at now, I think they've released the first client, the first open source code that anybody could run, like a RGB wallet. So it's already usable as technology. It's just, of course, they haven't thought of all the user experience details and everything, but they've started working on the implementations. So I'm pretty sure they're going to show us a lot about that and answer all your questions you're going to have when they get here. I've presented RGB in the past, and in a presentation I did for Bitcoin Montreal that you can find on YouTube as a webinar. I was presenting Lightning apps and just different ways we can use Lightning for applications such as Sphinx. So this talk could have gone on the Lightning Day since it's very Lightning related. But since it's layer 3 and it opens 1,000 extra doors than just making applications, it's really about creating new protocols. Then we just decided to make it dedicated for this day. No, not yet. Okay, so maybe we can shoot them a message, Maciek, and see if they're around. But we're ready whenever they are. But yeah, we fell under this. It's not super known as technology. It's more and more. Also, other contributors, it's Giacomo Zucco. He's worked on this stuff as well. Peter Todd gave some early ideas about this. Lately, Bitfinex has also started working on this. So it's getting more and more traction and more contributors to these types of technologies. But really, Pandora Core are the ones leading the front on this. But yeah.
You said that you need 2 minutes. So
2 minutes, all right. Sounds good, sounds good. Okay, so just 2 minutes and they'll be here, and it's gonna be pretty technical and very heavy. So I hope you had time to get some coffee, because else it's gonna be very long. But it's very interesting, I think, and it just opens the door to many possibilities. So keep that in mind when listening to this. What things could be done, could be developed with this type of protocol, and you should have that in mind when listening to this, because it's, like I said, it's very early days. This came from a scientific paper towards a practical implementation, but it's not production ready. It's still alpha software. So we're very far from the days it's going to get implemented, application, business use cases are going to come. So keep in mind, maybe you'll be the one developing something out of this. Okay, so they're here. Hi, Dr. Orlovsky or Olga, do you hear us?
Good day. Yes, I do hear you.
Hi. Well, thank
Hi.
you for joining us. So yeah, I was just giving a little background, but I'm gonna let you jump in and just present to us what you've been working on, the presentation you had prepared to us. So we're listening to you whenever you're ready.
Thank you. I'm ready. I can start sharing my screen. Do you see it? Yes.
Yes.
I see that you do see it. If I will go the full screen mode, you do see it now. All right, perfect. Today, I would like to make a presentation on the topic that being in the development for almost 4 years, probably, for now. And it's a marginal topic discussed broad inside Bitcoin community, but not very much outside of it. And maybe many people inside Bitcoin itself are not aware of what we are doing here with this RGB. But anyway, I think it might be interesting for many other people outside this small scope of the initial cradle of the smart contracting thing for Bitcoin and Lightning Network, because these days we are approaching closer and closer to the initial releases of the products on top of this technology. So I would like to talk a bit more about what it is about. Like, what is RGB? What all these smart contracts for Bitcoin and Lightning? And I probably can say that the smart contracts, which will be able to operate on top of the Lightning Network with Bitcoin as a native currency, may be considered as an unholy grail of anarchism. Why? Well, because that's the way how you can get the full-fledged promise of smart contracts, and I will say in a few moments what are smart contracts are, to the world of anarchy, where you do not compromise on the censorship resistance, scalability, and privacy, unlike all the other existing smart contracting systems of today. And I think that those people who were working on the last 4 years, at least, on this idea of RGB, have approached the narrow line of how it is possible to do, not being distracted by any ICOs, any really fast profit schemes, but just following the values and following the goals that I just mentioned to get this finally working in a proper way, without introducing new blockchains, without introducing new tokens, without introducing nothing that can be cut with a comma, that can be shaped with a comma blade. So before diving deeper, let me just try to reestablish the definitions and terms. What are the smart contracts? And actually, it's very simple, because the smart contract is something that is automatically enforced, and it's just not automatically enforced. It's automatically enforced because there were some agreement between parties, which are the parties of the contract, and once they agreed voluntarily upon certain conditions, with the development of events, the contract is automatically enforced upon all of the parties who were part of the initial contract, voluntarily part of that initial contract. And it is very important that automatic enforcements, where that it is performed without direct human involvement or any subjective factors, and the enforcement itself is strictly by economic means, meaning somebody loses money, somebody gains money, and it also relies on mathematics, like clear, pure arithmetics, without any form of physical violence. And these days, there are a lot of smart contracting systems. Everybody is saying that we are doing smart contracts. With the emergence of Ethereum, just several years ago, there were this feel that finally we reach the world where anybody can create a smart contract without physical violence, without the physical enforcement, and get the economics working for them. There are even a term like crypto economy or something, and token economy, and all these weird words which were actually hiding the fact that still there is a certain gang of people manipulating all the market. But anyway, it was perceived very welcoming by the community because they were tied by the known gangs like government and regulational agencies. So they were fancy of having the new guys who are not known that much, who are ruling over these DAOs. Anyway, so we had this hype of smart contracts, which were actually false promises. And from now on, I would like to ask you to turn your imagination and imagine a world where new decentralized protocols can be created without issuing a new token. And that is really possible, and I will show you how. But that's indeed true, that it is possible to create new decentralized smart contracts without creating a new token. And you can imagine that it can be possible with Bitcoin being the only real money used for stakes or money backing certain forms of derivatives like discrete law contract backed futures or other forms of derivatives and other forms of assets. Of course, there might be forms of assets like company shares, bonds, loans, which are not necessarily backed by Bitcoin, but again, they can be valued in Bitcoin itself, and you don't need to introduce a new token for that. And with all of that being private, not being present on some certain form of blockchain, which can be analyzed with the chain analysis tools. And again, the regulators can look into that and say, oh, here you have this sort of transaction, you have to do that and that. No, it's completely private. Nobody in the world knows that. And it actually brings us back to the very emergence of the algorithm of the free market idea when it happened that in Netherlands and the Great Britain, the first markets had emerged in early days of the 18th century. And these markets were not defined and driven by the centralized registers called by the market makers. Like today, if you go to the stock exchange, you will have a centralized register. If you go to the crypto world, you will have the same centralized registry called blockchain. People say that it's not centralized, but it's centralized because I can look into Blockchain Explorer and see all the transactions. So from an informational point of view, it is completely centralized. And can you imagine that those days before the digital world, there was a possibility to own something, to have a money, to have a financial derivatives in the form of cash and in the form of what is called bearer rights. And that is actually what we are trying to reestablish today with the RGB and this form of smart contracts. Because all the smart contracts that have existed before today are just a centralized form of the agreements tracked by the centralized registry called blockchain, fully available to the centralized analysis and tracking. What we are trying to achieve is to bring this backwards to the 18th century and digitalize not the state of the today centralized governed world, but the state of the free market and algorithm of those old days, bring the whole power of the cryptography and the freedom of the blockchain of censorship resistance coming from proof of work of Bitcoin, the real and the only up to today form of money which can't be censored and can't be basically used by the means of the government to be backing these forms of agreement, which we call bearer rights agreements. And that's basically what we are trying to achieve. And we would like to create a renaissance of the West free economy which have been flourished several centuries ago, and these days it's actually vanished. And by doing that, we would like also to define in a very clear way which parties should be trusted in certain form of the smart contract. For instance, if you have an issuer of any form of asset, like corporate shares or corporate bonds, you have to trust the issuer. There is no way, and there is no way that digitalization can solve this form of problem of trust, because you invest basically in certain company, you get its shares, and you have to trust the team to do its work. There is no way how you can magically solve the problem of trust by just saying that, okay, we are investing not into shares, but we're investing into the tokens. It's just a lie, because you still are relying on the efforts of a certain group of people, and you have to trust these people to be able to deal to bring what they promised on. So there are clearly certain forms of trust which can't be resolved. Okay, for Bitcoin as a money, we can create trustless form of money, but for many forms of smart contracts, it is unavoidable that there will be a certain parties that has to be trusted. And what we are trying to achieve is clearly define the line between the parties that has to be trusted within a certain scope of the smart contract and the parties that are trustless. So we are not trying this to recreate this Ethereum style lies about DAOs which completely trustless, while you still have to rely and trust to the owners of the keys who can override the whole DAO smart contract. And it's like that is what we try to avoid. We're very clear in the level of trust required to run the smart contract. And basically, all of what I have just described as a vision of a proper smart contracts was an effort of several dozens, probably, of Bitcoin maximalists and people who are aligned to the values behind the idea of Bitcoin, who worked on RGB protocols over the last 4 years. And it has been a long way since 2016, started with the initial concepts coined by Peter Todd about the client-side validation and single-use seals. I will be talking a brief about them later, which are basically a technological ground of the security of the RGB smart contracts and how they can be scalable and how they can work on top, not just Bitcoin blockchain, but also Lightning Network. And this idea were grabbed by Jack Mazuka, who actually was very interested into looking something into the alternative to existing financial assets made with ERC20 and colored coins, how to do them properly. And basically he took the ideas of Peter Todd and he envisioned the application for creation of better fungible asset protocol on top of Bitcoin and Lightning Network, which was very restricted in its actual potential, like it was capable of dealing with a very specific forms of fungible tokens, and it was mostly usable for if they are just a single token in the network, and so on and so forth. But anyway, he had created the first concept and first proof of concept in 2017 and 2018. And that was the point where I picked this up because I really was looking into creating a much more extended smart contracting system in accordance to these crypto-anarchic values like censorship, resistance, privacy. And I have seen the potential of this system RGB much behind just simple tokens on the Lightning Network, because like tokens are mostly used for scam. And there are much more interesting smart contracts and schemes which can be created when you put the smart contracts into a proper form. So for the last 2 years, me and Giacomo, we have created the LNP-BP Standards Association, which were governing the further development of this protocol. and working on the implementation and enhancement of the protocol to much more generic form, which I will be presenting today. And over this all 4 or 5 past years, there were no ICO token issuance or anything like that created. It was funded by the parties who were interested in the technology, including our own selves with our own private funds. And all the protocols and standards today and for the whole future are open source and under very permissive open source license. So today, what RGB as a smart contracting system today? It is led by this association, which is non-profit, Swiss-based, and actually it's a non-organization even, because in the Switzerland we have this opportunity of having companies which are not being registered anyway, just signed by the parties participating in that. We have more than 25 contributors to the standards and to the source code of RGB. Over these years, we have written more than 1 million of lines of the Rust code, because most of the protocol is made with Rust. Most of this code is not RGB specific, and when it went into the lower level libraries of Bitcoin and Lightning Network, for instance, we contributed a lot into Rust Bitcoin, and we also had to develop our own Lightning implementation, our Lightning Network implementation from scratch. And there is also, additionally to that open source and public effort, there is also a certain set of consumer-facing products that are developed by for-profit entities, including my own company, Pandora Core, Condensat Technologies, Nodal, Hodl Exchange, Blockchain of Things, and many, many others who are already working on the consumer-facing implementation of certain aspects of the protocol. So coming back to RGB, why do we need it? Well, first of all, we would like to bring more programmability to Bitcoin and for Bitcoin, up to enabling such things as a certain forms of DeFi. I don't like this word, but let's say that certain forms of financial smart contracts, which have a limited and restricted source of trust over the Lightning Network. And while doing that, we would like to do that not at the price of the scalability. So we do not want to store any additional data on the chain, just not to increase the bloat of the blockchain itself and not to reduce the ability to scale with all the smart contracts data that are required to run this stuff. And the other aim and our goal was to bring much more confidentiality, not compared only to the existing smart contracting systems, but also compared to the Bitcoin itself. Let's make Bitcoin more private and more confidential. And by designing RGB smart contracts in this way, they became pretty much different from what exists in the cryptosphere, like Ethereum style smart contracts, because Ethereum was just the first of many of those who followed it. And these days we actually have the only way of doing smart contracts in Ethereum style. Unlike this style, with RGB, you just do not have a utility token at the protocol level. The only thing that is available for you at the protocol level is just money in the form of Bitcoin, even if it is Bitcoin over Lightning. And there is no such concept that there is a new token like for paying for gas prices, Ethereum, Polkadot, Cardano, ADA, whatever else. No, there is nothing else than just pure Bitcoin. And we were trying to reuse the best consensus that exists today, and we succeeded in that. And that consensus is Bitcoin proof of work. No proof of stake, no new blockchains, because without proof of work, you wouldn't be able to reach censorship resistance. With proof of stake, you always have a known set of validators, and you wouldn't be able to reach the plausible deniability of participating in the network, which is very important to having something really confidential and really uncontrolled by any agency that can be created by the modern days political systems. The way you program smart contracts with RGB is made very declarative and functional style. So the business logic of the smart contract is completely unlike to what you have in EVM, Ethereum Virtual Machine, or even BASM world, because instead of imperative programming, we focus on what is really important, and what is really important is actually the ownership and the change of the ownership. You can be owner of certain form of assets, or you might be an owner even of certain forms of rights, and you have the right to execute certain forms of state changes or state transitions. And that's what we are focusing it. What rights do you have, and the way you execute these rights, and the way the system controls and checks that the rights being executed by a prop party who has the right to do certain things. And with Ethereum, because they didn't follow this paradigm, they followed more like JavaScript approach, where there were no clear distinction between the state and the changes into the state transition, which state is stored, which state is changed. Is there any owner of this particular form of state, or just a generic global state? Because they haven't distinguished these parts, they had run into all of these nightmares about the hacks, about stealing funds, and so on and so forth. So that's why we decisively has not followed the JavaScript-based simple way of replicating just any simple coder who just finished some web technology can code the smart contract. No, he wouldn't be able to do that, and it's very fortunate. You have to be educated in a proper way to define the smart contract for RGB, and at least you have to be thinking in the declarative and functional programming way, clearly understanding who has the right to modify the state. And another very important distinction from the common smart contracts is that there is no global state. And by not having a global state of the smart contract, we are able to make the smart contract scalable and functional, finally. With that, we were able to bring the smart contract as a layer 3 over the Lightning Network as a layer 2. We don't need a separate blockchain. We do not need to put the data into the blockchain, and we don't need to reach the global consensus on the actual data. What we do is we just simply reutilize the security properties of Bitcoin blockchain and decentralization and censorship resistance properties of the proof of work consensus to define the ownership completely on the client side. And I will be talking about that in a moment. And by doing that, each of the contracts are completely isolated from all the other contracts. And we may say that the contracts are sharded from the day one without the need of creating the RGB2 or whatever happens in Ethereum with these fruitless attempts to scale what can't be scaled by its own nature. So that's the general business level, let's say like that overview of the RGB. And now I would like to go on into the details about how we actually achieve this goal in terms of the technology. And just give me one moment. I would like to check how much time do I have left. Yeah, it seems like I have enough. So RGB as a technology is all about client-side validation. And I think it's important to explain what is client-side validation. Well, throughout the development, at least during the last 2 years, we had a lot of developer calls which were recorded and textually recorded and video recorded, and they are all published and available for you to view them. And it expressed the whole complexity of this new client-side validation paradigm, because unfortunately it is complex. It is the same complex like blockchain when it emerged. So it took many, many years for even technological people to understand what is blockchain, how it works, how it is different to the rest of the world. And of course, it was understood in a wrong way. So everybody thought that blockchain is the ultimate solution to all sorts of problems, which is not. And pretty much it is the same with the client-side validation. The client-side validation presents the same shift of paradigm as blockchain was a shift of paradigm for the pre-blockchain world. So it's really hard to grasp how this client-side validation works. And in particular, there is a so-called single-use seal mechanism, which the client-side validation sometimes rely upon. And it's really hard, but it's a heart of the security of the RGB technology itself. So I wouldn't put my goal today to explain everything behind the client-side validation and single-use seals. Again, there is a lot of materials which you can easily Google if you look into LNPPP Association YouTube channel and just search for client-side validation and single-use seals, or if you dig into rgbfaq.com website, you will also able to find the answers there. But just as a high-level introduction to the concept, I will give you certain insights about it. So what is client-side validation? The client-side validation is a trustless distributed computing system. So it's a form of distributed computing system which operates on the layer 2 and layer 3. And this system uses layer 1 for state verification. So basically it reuses the blockchain, in our case, Bitcoin blockchain, as a cryptographical commitment layer. And it builds actually the computing, trustless computing, distributed computing system on top of blockchain, not inside of it. And in this system, the user is responsible for keeping his own data, his own state. And if the user will lose his state, he will basically lose access to what was linked to this smart contract. He wouldn't be able to prove that he's an owner of certain assets or certain rights under the smart contract. And it's not that the network will keep this data for free for him. It's pretty much the same as with the private keys in Bitcoin. If you use your private keys, you use your Bitcoin. If you use your client-side validated data, you actually lose your state, you lose your rights under the smart contracts that you were participating in. This is a downside from one point of view, but from the other point of view, this is a great upside, because this allows you to go back to this bearer right formats that were lost for at most 2 centuries now, where you are just keeping the proof of your known ownership of your own rights, and nobody in the world is able not even to confiscate it, but even to know what you are actually an owner of. So unlike with Bitcoin, unlike with any blockchain system, where using the chain analysis tools and just by knowing your public key, people will be able to know what do you have, what ownership and what property do you have, how many money do you have. Here, even if your public key is got exposed, nobody will be able to guess what kinds and what forms of ownership and which amount of assets you own under RGB smart contracts. As a downside of that, of course, you are responsible for keeping that data by yourself. That's why they're client-side. And this client-side validation technology is both an alternative as a layer 2 or an extension as layer 2, 3 to the state channels, like Lightning Network. So basically, you can use it as a scalability system for blockchain itself without the Lightning Network, because here you get the scalability in terms of the data storage and data size. The blockchain do not keep the data of all the users. Or you can put it on top of the Lightning Network and get it as a richer state and more programmability on top of the scalability and confidentiality that is already provided by the Lightning Network. And as I said in the beginning, this concept of client-side validation was coined by Peter Todd as a logical extension to his work on open timestamps. There is a lot of misunderstanding around client-side validation, and I would like to draw a very strict line between what is client-side validation and what is not client-side validation. So unlike what I just talked about, there are several examples of the cases where they are not clearly client-side validation. So let's say that there is form of client-side data which is not validated on the client side, so they are not client-side validation, but just the client-side data. And the cases of such are Bitcoin pay to script hash and the new Bitcoin pay to Taproot, which require you to keep certain script source on the client side. But because the validation of the script and validation of the public keys and private keys which you own are made by the network itself at the blockchain level, it is not client-side validation. It's just a client-side data. Another example is a MuSig2, which will be used by, again, Taproot. It requires you to keep certain forms of client-side state, but you are not validating that state. You are publishing that state into the blockchain whenever you would like to update the state. And finally, again, the same can be said about the state channels like Lightning Network, Discreet lock contracts, and other forms of state channels, which actually require you to store certain forms of state. In this case, signatures of the other parties participating in the smart contract. But again, it is a network which does the validation and verification, not yourself. So basically, that's why we are talking about and clearly distinguish the client-side validation from other forms and other cases when you keep the data on the client side. And client-side validation is when you validate client-side data against certain rules, which must include blockchain-based commitments and are not directly stored into the blockchain itself. And there are basically two ways of storing these commitments, which called timestamps and single-use seals. I think I wouldn't go into the details of the comparison between state channels and client-side validation. There were a talk on client-side validation, separate talk, which you can find on Git on not GitHub, not Lightning Network, but YouTube. It's all the video storage from the previous century. So if you will go there and look into that, fortunately you will find it. Just search for client-side validation. And I give there a detailed explanation how the state channels are different from client-side validation. Basically, there are a set of trade-offs. There are some things which are good about the state channels, and there are some certain things which are good about the client-side validation. And it's always about choosing the proper proportion. But the fortunate thing is that you are not restricted by any of them, because you can put the client-side validation on top of the state channels and get best of both worlds. So why do we need this client-side validation? Why all this complexity is coming from? Well, basically it gives us very well-defined for advances comparing to what we have today. You got more confidentiality than in blockchain. You get more scalability comparing to blockchain. You have a higher programmability, much higher programmability than in both cases of blockchain and state channels like Lightning Network. And you have much richer state data comparing to, again, both blockchain and the Lightning Network. And just to put in scope this RGB thing, is just as RGB is just a particular case of the client-side validated systems. There are other systems like timestamp based. Open timestamps is another example of client-side validation. It's much simpler example. And there might be more examples of single-use seal-based client-side validation other than RGB smart contracts, which haven't emerged yet, but there are clearly an opportunity to develop the things in this direction. And basically, if we will talk about distributed system, we will see that there are replicated distributed systems, which these days are called blockchains, the word that I don't like. And across those blockchains, there are proof of work based systems like Bitcoin. There are Byzantine fault tolerance databases, which called blockchains, which are not blockchains, but just distributed databases. And there are federated blockchains like Liquid. Additional to these replicated blockchains as a distributed systems, there are non-replicated systems called state channels. Across them, you know the Lightning. There are other systems which emerge, like discrete log contracts or Storm and Prometheus, focused on the storage, decentralized storage, and computing. Again, coinless decentralized storage and computing. And finally, there are client-side validation, which is a third category, additional to blockchains and additional to the state channels. And inside that category, you have timestamp-based systems and single-use-based systems like RGB smart contracts. So again, let me check the time that I still have. It's like, still have about 15 minutes before the questions. So I will try to finish the presentation soon. So RGB. RGB are smart contracts that use client-side validation technology. And within this concept, there are always an owner of certain forms of state of the smart contract. For instance, you are an owner of assets, corporate shares, a certain amount of stablecoin, and your ownership is completely defined by the client-side data that you need to store by yourself. And it is impossible to link from blockchain shown on the right side to the client-side validated data, which in case of RGB we call stash. And the only way that you can prove this data is by getting direct access to this stash and verifying the proofs in this stash against the blockchain or state channels, which are, again, has to be verified against the blockchain. So you will be able to commit to the current state of the smart contract and verify this commitment using either Lightning Network channel state or blockchain, but you wouldn't be able to go from the blockchain itself or Lightning Network channel to the client-side data without having access to those data. And it's been a big question whether this thing is a layer 2 or layer 3, because like we can say that Bitcoin blockchain is always a layer 1, okay? There are also sidechains, which are kind of something on top of Bitcoin blockchain, but it's not exactly the same thing as a Lightning Network, which is clearly the state channels like Lightning Network, they're clearly layer 2. So probably sidechains are layer 1.5 because you can get Lightning Network work on top of sidechains as well. And in this case, client-side validation is something like layer 2.5, combining properties of both layer 2 and layer 3, because you can get client-side validation to work on top of state channels, on top of sidechains, and on top of Bitcoin blockchain. So basically it works with all these three things. And the security model, as I already said, comes from the concept of single-use seal. So each of the RGB smart contract is a shard of the directed acyclic graph of the state transitions, which are held and kept in the client-side data, in the stash. And this RGB smart contract, it assigns the state to a certain UTXO on the blockchain. And when the transaction output is unspent, meaning that it is UTXO, unspent transaction output, it means this is the current version of the state of the smart contract. And once you spend the transaction output, you ultimately discard this state of the smart contract, and you need to create a new state transition, and commit to this new state in the transaction that spends that UTXO that held a previous state. And by doing that, because you have just one direction arrow pointing from the client-side validation to the blockchain, not vice versa. You can't go from blockchain to the client-side data. You are able to keep the confidentiality, and at the same time, you are able always to verify the validity of the smart contract state, because if the smart contract state is linked to the unspent Bitcoin transaction, it is valid. If the transaction has been spent, transaction output, which can happen only once because of the security properties of Bitcoin itself, you can't basically change the state of the smart contract twice in two different uncompatible ways. I wouldn't go into the details of how exactly the transfer of the state works between two parties, because they are quite technically complicated, and as I said, they require a certain form of paradigm shift from the blockchain world to the client-side validated world. But I would like to say that there is about half an hour where I did the description of how the state transfer works on this presentation. If you look for the RGB programmability video and the video before that, which is called client-side validation, you will see the very detailed description of the whole mechanics behind that. And also, actually, I would like you to check these links if you're interested into specific technical details on how this specifically works. So with RGB, we have a client-side validation where the ownership and double spend is defined where the ownership is defined and double spend is prevented by reusing Bitcoin script combined with a single use seal validation. We verify the consistency and completeness of the RGB smart contracts with a tool which we called a schema, RGB schema. I will give you certain examples just in a moment. And we use a specially designed virtual machine called Alluvium, arithmetical logical unit virtual machine, that actually validates the complex state changes inside the RGB contract. And this Alluvium, it's a bounded Turing machine, meaning that you can't get Turing completeness at each state transition, but in terms of the whole smart contract, you get something that's pretty much aligned with the Turing completeness when you track the whole evolution of the smart contract. So potentially, we don't have a formal verification of that, but we're quite sure that it can be proven that the RGB smart contracts are Turing complete, while each state transition, each operation on top of the smart contract is not Turing complete. And pretty much, I would like to say that Ethereum is pretty much the same, because you have this bounded execution by the gas consumption. So Ethereum, in fact, is not Turing complete as well. So how to write RGB smart contracts? Let's try to zoom out from the technological depth of this. Basically, each smart contract consists of a certain state, which is a data, and certain forms of behavior, which is the business logic of smart contract. This is true not just for RGB, for Ethereum as well. It's just the case that they do not distinguish and clearly differentiate between these two things. What we introduce in RGB, which is quite new to the smart contract world, is a very clear distinction of the ownership right. As I already said, there is always an owner defined by a cryptographical means, and the owner is the only party having the right to update part of the contract state, the part that is owned by him. So this concept is absent in Ethereum, and actually I think that is the source of a lot of problems and hacks there. With RGB, we do that, and you operate with these concepts of state, behavior, and the owner using what we call contraction. This is a language in development progress. It's not completed yet, and it will be released after the release of the RGB to the mainnet, because basically the language is compiled into bytecode anyway, and the bytecode wouldn't change with the language introduction, but the language will simplify the development for end user and programmers of the new forms of smart contracts. So that's why we will release it later after the release of RGB, and it wouldn't change anything in the core RGB technology. So the contractum is Haskell-inspired language for RGB smart contracts. It's not a subset of Haskell itself, it's just inspired. So it doesn't look like JavaScript, fortunately. Maybe this will prevent people from creating that stupid errors that they always create with the Ethereum smart contracts. We will see. No, I'm not sure about that. It tries to avoid visual clutter as much as possible. It is focused on the validation procedures. It tries to avoid food guns as much as possible, and it's designed with the composability and category theory in mind, and made potentially for the formal verification tasks. So that's how the schema of a smart contract, which is a skeleton of a smart contract, which can be used by many contracts, looks like with the contractum language. So with the schema, you create the rules for the contract. For instance, you can define here, you will define an RGB20 schema, which is an equivalent to ERC20 fungible token. And if you'd like to issue a fungible token, you will just implement the schema with a certain smart contract in just a few lines of the code. You don't need to write as much code as you write in Ethereum when you create the smart contract. So this code will be used by all the smart contracts, reused by all the smart contracts that are doing fungible tokens. And it's pretty much simple. So you see that there, for each state transition, there's just a single line that checks and verifies that the sum of inputs is equal to the sum of outputs, and so on and so forth. So simply by changing the view on the smart contract state, by clearly distinguishing the state from the behavior and defining the ownership right, we are simplifying programming of the smart contracts, not even using the JavaScript light language. And what I just said is basically why we need the schema definition, is because you can put the schema in between the wallets and smart contracts, and the schema is defined by API for issuing contracts, reading the contract state, and creating new state transitions. So basically, unlike in Ethereum, where you write the code for each smart contract once and over again, here in RGB, you just create single schema with certain properties, and all the contracts that need these properties, like having a RGB, having a fungible token, they just implement the schema and do not call the business logic at all. The smart contract in RGB is made of many nodes which compose the directed acyclic graph. And this directed acyclic graph exists outside of the blockchain. It completely exists in the client-side validated world. However, this graph is linked with what we call anchors to the blockchain. And because anchors, again, they're part of the client-side validated state, they are not part of the blockchain. You can't get a look into the anchors from blockchain side, but you can check and validate them as a proofs of the commitments from the client-side validated side. As at the end of this presentation, I would like to say a few words about how RGB works with the Lightning Network. And very important that because the RGB state data are committed not just into Bitcoin blockchain, they're committed into Bitcoin transactions, which then go into Bitcoin blockchain. It makes no effort to put the same system on top of Lightning Network, because Lightning Network operates with Bitcoin transactions. It's just that these Bitcoin transactions are not yet mined, but you can be sure that when you need to mine them, you will be able to mine them, or to penalize those who mined improper Bitcoin transactions. So the same applies with RGB. You commit to the state inside the Bitcoin transactions, and you will verify the RGB client-side validated state by either comparing the transaction to the blockchain, making sure that the transaction is mined at a certain depth, or verifying that the transaction is a part of the valid channel state, where you being one of the party of this channel. So RGB itself does not require any changes to the Lightning Network protocol. Fortunately, we don't need to update it. Well, there are very, very small changes, tiny, which doesn't break the model. The problem, though, is that it requires changes to the transaction structure, because we are basically do the cryptographical commitment inside the output. We're tweaking the public key, and it breaks the transaction ID. So you get the different transaction ID from comparing to the client that is not RGB aware. So the only way you can establish RGB contracts inside the Lightning Network is when both parties are they run the RGB compatible node. And it happened that unfortunately during to the architectural limitations, existing Lightning Network nodes they have restrictions which prevents them from simply implementing the tweaking of the public keys. I hope that this issue will be solved, because RGB follows pretty much the same paradigm as Taproot. So if ever Lightning Network is going to upgrade to use Schnorr signatures and Taproot itself, which is a very fortunate and desirable outcome, they will have to modify the software of the Lightning node such that the tweaks are possible, and it will render the nodes compatible with RGB. Before that time, we had to develop our own implementation of the Lightning Network, 100% done in Rust, called LNP node. And we developed it in a very modular way, such that it's not that just an RGB tweaks are possible. We made it such that you can implement different types of new types of state channels, like discrete lock contracts or multiple channels. You can play with a Taproot supporting that and L2. And that is actually the only node today, which is still in the development, which will be able to run RGB smart contracts on top of Lightning Network. But hopefully, with further adoption of Taproot, this list of the nodes that support RGB will increase. And our plan that we will be shipping later this year, altogether, the RGB system, working with the Lightning Network, operating using Taproot and Schnorr signatures. So the LNP node, when it will be working with RGB smart contracts, it will by default use Taproot and Schnorr signatures. And right now we are in the process of developing and defining how the Lightning Network should be upgraded to use Taproot and Schnorr. And also what we would like to have in this release is what we call generalized Lightning networking. And it allows in new types of channels. It allows you to define a custom channels, for instance, a multi-peer channels where there's multiple participants participating the same channel, or run a discrete log contracts in that, or run more complex forms of state channels like storage channels for Storm and many other things. So we plan to bundle all these three items: the RGB itself, the upgrade of the Lightning Network for Taproot and Schnorr signatures, and upgrade for ability to negotiate the structure of a channel, or upgrade the structure of the channel to support other protocols than just simple Lightning payments, as a part of LNP node and initial RGB release. And in doing that, we are trying very different approach from the industry, because actually we need to handle and bundle a lot of new functionality altogether, quite disruptive functionality. So currently we are very hugely centralized at the development. At the same time, I do believe that the system will be very decentralized at production stage, because this is all open source and everybody is welcome to fork and to do the development the way you like. If you don't like the way that RGB is implemented or the way that it operates and interoperates with Lightning Network, you're free to fork and change that. And the whole core of the technology of the standards is open source and free. It's really hard to understand it. I understand that it presents a very big threshold in terms of the knowledge that it takes and the amount of time that one have to invest to understand exactly how RGB works. But it was pretty much the same with the day when Bitcoin was released and people were inconvenient with the blockchain concept and Bitcoin concept and proof of work concept and consensus concept. So with RGB, you get a lot of new concepts which are pretty much the same level of unfamiliarity, and it will take years to grasp all this by the industry. But notwithstanding that, all the products are open source, and the products which will be consumer faced and released by the companies who already involved into RGB development will be working for free if you are able to compile them from the source code. Otherwise, of course, you will have to pay for support. So that's our model we follow with the RGB development. And that's all for my presentation today. And if you still have a question, time for questions, I'm open to answer them.
Right, well, let's all give a round of applause for Maxim. Thank you for that. It was very interesting. It's quite hard to grasp, but a lot of information, but it's very interesting. So, does anybody in the room have any questions right now about all the topics presented here on RGB, on the launch, on anything? Okay, we have a question here. Go ahead.
Dr. Orlovsky, can you detail some applications that you think will be useful for those types of smart contracts coming on with the RGB?
Yes, sure. Thank you for the question. Basically, potentially, I think that it is possible to do any type of things you can do today with Ethereum on top of RGB. That is arguable. So, because the paradigm of RGB is very different. You don't have a global stage. Arguably, you may have forms of smart contracts relying on the global state, which can be represented in RGB. But I think that there is always a way how you can redefine and reprogram them in the way that they will still work on that. More specifically, what we oversee as the first use of RGB are the following, and actually that will be the products we will be developing based on RGB, will be the following cases. First of all, you will be able to create stable coins, including algorithmical stable coins. You will be able to create quite complex smart contracts for storage and computing. You will be able to use RGB for non-fungible tokens, including the storage, because with RGB you get this client-side data, and unlike with Ethereum, you have a solution for storing this data and even storing them in a decentralized way. There is a protocol which we call Bifrost and operates on top of Lightning Network and RGB that allows you to do the decentralized storage of the data, including the storage and distribution of the data, including the data that might be needed for NFTs. So we think that with RGB, we'll get the NFTs which are really decentralized. And there are also initial concepts of reputation system, identity systems, naming systems that can be created on top of RGB as a smart contract. So we are also working in that direction.
Crowd, maybe on the live stream, is there any other question? Oh, Kevin has another question. Go ahead.
Thank you, Dr. Orlovsky. I got another question. So I'm not a developer, so bear with me, but it's probably a simple question. But you mentioned RGB being built mostly with Rust, and can you explain
yes.
why this language is favored against others? Well, yeah, that's the question basically. Why Rust?
Yeah. Thank you. Well, the programming language is always a tool. So it's not the ultimate source of truth. You can do any technology in any language, but It actually up to the properties you would like to focus on when you do the implementation, and that's the way you choose the language. So the fact that RGB is made of Rust is not meaning that you can't use it from other systems. So there clearly an API that allows you to use RGB from most of the used languages, but the choice of the core implementation, the Rust, is because it's it's the best system level language that exists today. It's a very good successor to C. It was created as a successor to C and C++. It has all the strong sides of C and C++ as a system level language, and it solves a lot of issues which were known for many years for those who work with those languages. It doesn't have any runtime, so it can run on any hardware, including low-level edge devices. It doesn't have any memory garbage collector. It's very deterministic, and basically, it's the best tool if you need to do something reliable and interoperable, which is the case of RGB.
Any other question?
We have a question on the live stream. Somebody asking, how can a data container be used to transfer files privately over RGB?
The RGB itself doesn't provide any transport layer. So it's agnostic on the way how you will transport the client-side data from party to party or any NFT-related data containers. This problem is solved by the protocols which operate on top of RGB. And the protocol we developed, which I mentioned, the Bifrost, it uses the Lightning Network to transfer the data in decentralized way. Basically, it's an extension to the Lightning Network protocol, such that you can think about it as a BitTorrent over the Lightning Network, basically. So I think that's the most simple, non-technical explanation how it will work.
Jose has a question.
Sorry, and BitTorrent, which is paid with a Lightning if you need to pay for certain services. So it's BitTorrent plus incentivization model, but charged in Bitcoin over the Lightning Network.
I wanted to ask you about, we heard yesterday about Sphinx and how they're doing kind of like podcasting 2.0, and you spoke about decentralized file hosting. Would there be a possibility to like have the podcasts or some kind of like, you know, content that's like heavy on bandwidth with this RGB smart contract technology be useful for storing content like that in a decentralized manner that would be censorship resistant?
First of all, probably you wouldn't need smart contracts for that, meaning that you wouldn't need RGB for that. So we are huge proponents of reduction of complexity. So if you can do something in simple way, there is no reason to make the things more complex. So if you can pay per second of the content over the Lightning Network, you basically don't need RGB and smart contract at all. You just reutilize the Sphinx and Lightning Network for doing what you need. And basically that's all it needs. You don't need RGB here, I assume. But if you will need to do something more complex, like a proper, I emphasize on the word proper digital right management, not this shit that is modern word to understand under the digital right management, but I mean that if you are a creator of certain form of content and you would like to sell it, and make sure that the people who pay for the content, they have the proof that they are owners of certain rights on this content. Of course, we wouldn't be able to control the pirates by that way. But if you're okay with that, people who are willing to pay, they have ability to pay in the censorship, decentralized way, and they will have ability to prove that they have paid, you can reutilize the RGB NFT smart contract for that reason. And then you will again rely on the Lightning Network as a means of content distribution and potentially the storage.
Could it be possible to say that in a way, if you're just buying stuff over like purchasing content, you're okay just using the Lightning Network, but if you want to like convert that purchase agreement into an NFT on RGB to reuse it for like say monthly usage, then because it's conditional, it's a smart contract, then we would use RGB. Is that
correct?
Right? Okay.
Correct.
Thank you. Thank you for that. Anybody else got other questions for Dr. Orlovsky before he leaves us? Well, I have a question. I saw that you did a demo of the RGB wallet of the first version. So,
Yeah.
like the code is ready for us to test it. Let's say if we're able to compile it, or we can start testing front-end stuff, or should we still wait for
Yeah.
a release to happen?
The code is available. You can compile it and test it. However, this was the very first version, which actually the first time we were able to issue tokens and transfer them from party to party over the RGB. And of course, we have found many usability issues when we did this first concept. That was the reason why we did that. And right now we are working on the next version, which will solve all these usability issues and make the user story much simpler. So today you can get it from GitHub, you can compile it. If you have Xcode, you can run it on your device, because we have a version for desktop running Windows, Linux, and macOS, and we have mobile version which is Apple only, iPhone and iPad, not Android. Android is still work in progress. But this version, literally, it allows you to do everything that you need with RGB20 RGB20 fungible tokens, but it will take quite a lot of your effort to understand how RGB specifically work. So if you are not willing to compile and to look into that, you need to wait a few months before we release the second version, which we will be giving to broader publicity, where you will have a simpler user story, and you will have also RGB upgraded with better Lightning support and all the issues resolved which we have discovered over the last half of year of this initial testing phase.
Understood. Is that in a couple months or next year? When should we be expecting?
Well, as always, it's said 2 weeks, but clearly it's not 2 weeks in this case. I think our target is before the end of the year. Fortunately, it will be in the autumn. Unfortunately, if the flow of events will be not that fortunate, it will be closer to winter.
Okay, understood. Any other questions from the crowd, from the live stream before he leaves us? I don't think so. So another round of applause for Dr. Orlovsky.
Thank you very much.
Thanks a lot for joining us. This was great, very thoughtful. We'll be following up the development. All right. Have a good evening.
Bye. Bye-bye. Have a good evening. Bye.
Thank you. Bye. All right. So that was very complex topic. It's going to be on YouTube. So if you need to rewatch it, if you want to really understand the details, you can do it because it's hard to grasp. But for anyone watching online, for those in the room, we're going to take a break. We'll be back in 20 minutes at 45. It's going to be way easier after the break. It's going to be about Atomic.Finance. They're going to present a product that is ready to be used on Bitcoin, real DeFi on Bitcoin, and it's ready to go on beta. So maybe not open to the public, but if you're interested, maybe you can send them a message. They can include you in the beta. You can test the product. So we'll be back in 20. Thank you.
We're also going to do a raffle. So come up front, there's also a piece of paper, write your name on it, drop it in the hat, and we'll.
All right. Perfect.
So welcome back to the live stream.
Yeah, we're just gonna do a quick raffle because Bitbox or CoinShift and CoinKite, Cold Card, they were generous enough to give us a bunch of cool tools. So we have a Cold Card, a dice set. No, I don't have a. So like, if your name is chosen, just come up, pick something you'd like to have. So yeah, seed plate, Cold Card, dice set, another seed plate by CoinShift. Oh yeah, add your name. Bitcoin backup cards, Bitbox, Bitcoin edition. Oh, yeah. En arrière, ça attend. Ah non, mais check, il y a des papiers en arrière. Ok, comme ça c'est le même papier.
Il faisait un papier custom avec.
Ouais, c'est ça.
Vite, vite. We spoiled you too much, guys. I'm joking. Never enough, never enough.
For a good cause, matches.
Yeah, exactly.
Alright, so I need to shake it for 100 seconds. Okay. So.
GD Roi.
Dis-moi, let's go. So,
Prends le plus cher, là.
je peux prendre un des trucs ici. Comme l'autre qui. Ouais.
T'as-tu un hardware wallet?
Moi, j'ai déjà, je vais prendre ça, moi.
OK. All right.
Alright, next up. Jason.
Yes.
Nice. Cool card, good choice.
Martin Nollet.
Hey, let's go.
Je sais pas. Si je pague? Je sais pas, qu'est-ce que. Je sais pas si c'est même ça.
So, l'idée, t'as un dice set, 100 dés, t'as Tamper Evident Bag, t'as des Bitcoin backup cards avec du plastic seal, t'as un seed plate, un metal plate backup et un Bitbox.
That's it.
Metal plate backup, let's go.
Bads. Baddies. Bads.
Alright, nice.
Let's go.
Pour inscrire ton seed word, c'est un papier plus résistant avec plastifié. C'est bon pour des hot wallets en fait. Ça, c'est l'idée pour ajouter de l'entreprise dans la génération de votre wallet.
Ok. Non, je prends ça.
Parfait.
Merci.
Plaisir. Alright. Next up. C'est Evelyne? C'est ça? Ouais? Alright.
Wow.
Donc, ça, c'est pour inscrire vos 24 mots, mais c'est en format papier plastifié. Ça, c'est un sac pour cacher justement un papier que si quelqu'un le manipule, c'est visible. Puis sinon, il y a un hardware wallet Bitbox.
Très bon choix.
Parfait. All right, 3 more prizes.
François Jutras.
Let's go.
Yeah.
On va avoir un autre tirage demain pour ceux qui sont là. On a encore du stock à donner. We still have a raffle for tomorrow. Still a lot more gear to hand out.
Antonio. Yeah. Congrats.
All right.
All right, last one.
Last one.
Jose.
All right. All
All right.
right. Thanks, guys.
All right, perfect.
The other guys will have a beer and like we'll get over it.
I want to change.
You gotta trade now.
Okay.
All right, so let's see. It's 2 minutes. Well, is
Yeah,
going on?
so the next presentation is going to be about DLCs. It's going to be presented by Matthew Black. He works at Atomic.Finance. He's one of the co-founders, and he's going to be joining really soon. I actually wrote about DLCs like a few months ago before even they launched their beta application, and I found it really interesting because it can let you like create a bunch of financial contract on top of Bitcoin by minimizing trust and all the stuff you need normally to make it work. And what is really interesting is that at the beginning they were doing their projects and their startup on top of Ethereum, but they actually switched to Bitcoin afterwards after they tried a few things. So I don't know if Matthew is there. Not here. Okay. And they are also based in Toronto, so they're also a Canadian company, so that makes us proud, and we're happy that they've been doing this. We tried to invite them in person, but they couldn't make it this time. But I hope maybe in the future they will. No.
You know a joke?
Hmm?
You know a joke?
A joke? You know one? No. Okay. I'm not inspired today.
No Bitcoin jokes.
No Bitcoin jokes. I have Ethereum jokes. No, I'm joking. Yeah. But
Ethereum's pre-mine.
sorry?
Ethereum's pre-mine.
Se-
Pre-mine is a good joke.
Yeah, 70% pre-mine for Ethereum. Huh? But actually, not a lot of people know that. So, well, it starts to get known. But
What's the supply cap?
oh, that's a good joke. Is it here? No.
Yep.
Yeah.
Just that in. Second.
Hey, Matthew.
Hey Tristan, how are you?
Yeah. How are you? How are you doing?
Good, yourself?
Yeah, I'm good. So we're really happy to have you here to talk about Atomic.Finance. We have a nice crowd here in Montreal. It's you're actually closing the Bitcoin Summer, the conferences. So I think it's a good presentation to finish, and I hope you'll have fun presenting it.
Fantastic, yeah, really excited to be here and really excited to present to you guys. I think there's a lot of exciting things happening with DLCs, so yeah.
Perfect. So I will let you go, and I'm pretty sure there will be some question at the end. And so yeah, thank you very much for being here.
Perfect, that sounds great. Are you guys able to see my screen okay?
Yeah, it's all good.
Perfect, sounds good. I'll get right into it then. So thank you guys for having me today. I'm going to be talking a little bit about DLCs. I'm sure a lot of you are familiar, and for those that aren't, that's perfectly fine. We'll get right into it. But obviously, it's really all about building sound infrastructure for sound finance. How can we make sure that the infrastructure that we're building for Bitcoin is a Bitcoin culture fit and really fits in with the Bitcoin ecosystem? And so that's really what we've been focused on. But before I actually get into that, I want to talk a little bit about kind of why we're building on DLCs and a little bit about our history, actually. So, obviously a lot of us Bitcoiners in the crowd, I'm sure you've had a shitcoin history. We're really no different. Our story includes a story going from shitcoiners to Bitcoiners. Back in the day, we were I actually got introduced to the crypto really really Ethereum and DeFi, and at the time was working on cross-chain swaps. And it was at my time, working as a developer for one of those teams that actually, one of the Bitcoin maximalists on the team really helped me understand a lot more about the Bitcoin space and why sound money is so important and why Bitcoin is such an important currency and why the robustness of it is so important. And so we actually we wanted to build more tools that were really a Bitcoin culture fit. And one of the things that we worked on in 2019 was building atomic loans, allowing for people to get access to Bitcoin-backed loans in a non-custodial manner. Could there be a way where people could lock their Bitcoin as collateral and get access to a stable coin, for example, without having to give up, custody of their Bitcoin. And it was around this time in mid 2020 that we were very dismayed at kind of what was going on in the Ethereum ecosystem. There was a lot of shit coins being put out, this DAO or this governance token, and it just really wasn't in line with what we wanted and what we believed, that we wanted to create as a company and what we believed for Bitcoin. And so in August 2020, we actually ended up doing a full pivot to Bitcoin only. And part of this was because we were introduced to DLCs, and we realized that we could build a lot of all the financial tools that we wanted to build for Bitcoin using a Bitcoin only approach. And that's, kind of what we've stuck to since. But a lot of you might be wondering, well, first off, what is a DLC? So, a DLC really, in essence, it's essentially a Bitcoin Oracle contract. So it allows for two parties to bet on an outcome. And on chain, it looks no different than a 2 of 2 multisig. So, both parties, they take their funds, they took their inputs together, they put it into a 2 of 2 multisig, and then a payout occurs. Either one person wins or a different person or the other party wins. There's a lot of different use cases for this. Financial derivatives, of course, for options. We've been focused a lot of this on this for Atomic.Finance. Futures contracts for difference. You can basically create a stable coin using Bitcoin. And synthetic assets, of course. Imagine if you could have a stock represented, in Bitcoin itself. And of course, there is, a lot of other things like prediction markets, like the elections. We actually created, some of you might be familiar with Atomic Odds. We created just a little site to allow for people to bet on the U.S. election back in October using DLCs. So this is where this tweet is coming from. And then of course, betting on sports or betting on weather as well. So a quick overview. I'm gonna talk a little bit about the Oracle contracts, so the DLCs themselves, some privacy and scalability considerations, and then of course trust mitigation. So what is the Oracle problem? So in order to create contracts, you need some type of external data. But the real question here is who should you be trusting for that data, and how do you avoid the parties actually that are providing the data from colluding? So, what is the solution? Well, DLCs, of course. So with DLCs, what's great about them is there's no trust required, with your counterparty. So, here in this example here, if I'm entering into a particular DLC, you can see that, from my view, I'm entering into that DLC. I then enter into a 2 of 2 multisig. So you've got Alice and you've got Bob that are entering into this DLC contract. On chain, it looks no different than a 2 of 2 multisig. And so, of course, if Alice tries to screw over Bob, she can't do that because it's in a 2 of 2 multisig. If Bob tries to screw over Alice, she can't do that. He can't do that either. And so, it's really great because you don't require that trust with your counterparty. Obviously, you do require trust with the Oracle, but the good thing with the Oracle in this case is that it is oblivious. So you can see here at the bottom, the participant view, the participant can see their DLC, but the Oracle is not actually able to see anything on chain. All they see is, they might, sign for a particular outcome, but they can't actually see the DLC that's going on. They have no information about that. The other thing that's great about DLCs that's being worked on a lot more recently is composable oracles. So that allows for you to have, say, 2 of 3 oracles required instead of just relying on one party. And if they screw up, then then obviously that's very bad. And then obviously you have provable cheating. So what's great with that is that if an oracle does collude, I can prove that they colluded, and then I can actually give them a punishment for collusion. So you can have an oracle that's sitting there with, maybe they put a Bitcoin or 2 Bitcoin, at a particular private key, And basically what will happen is if they end up colluding, the parties involved with the contracts can actually derive the private key that was used for that contract, and then can steal the funds from the Oracle. So that's kind of a neat feature that exists in these types of contracts. So the next question is, how do you implement DLCs? So the setup for them is fairly straightforward. The first thing is that the oracles themselves, they actually commit to an event by publishing an announcement. So this is actually an example from the Surebits Oracle site. And so what they have here is an announcement for is there going to be 100,000 Bitcoin by the end of the year? And I think a couple of people have actually bet on this outcome. So obviously what's going to happen is the parties agree on the terms for building that transaction for each possible outcome. So obviously this outcome is really simple. Either it happens or it doesn't. And so you can see here at the bottom, in green, you have Alice here that's actually providing the inputs. You have Bob at the bottom here that's also providing inputs. And so what they do on chain is they provide those inputs into the transaction. They enter into that 2 of 2 multisig, and then off chain they sign for all the possible outcomes that could occur. So in this instance, obviously there's 2 outcomes: either Alice wins or Bob wins. So each party, they give their signatures, and then obviously once they've done all of that, then they actually broadcast the funding transaction. Moving on, for execution, it's pretty straightforward. So in this case, in the example I gave, if the announcement is for 100K Bitcoin by end of year, obviously at the end of the year, the Oracle is going to come along and they're going to say, okay, is Bitcoin 100K? Yes or no? And they're going to create a signature, a Schnorr signature, that basically represents that particular outcome. So this makes exactly one off it validates one of the off-chain transactions. So if you remember there was 2 outcomes. There was either yes, that's happening, or no. And one of those transactions is going to be valid. That's called a CET, a contract execution transaction, and that's obviously going to be broadcast. So either party can broadcast this transaction. So as soon as the Oracle broadcasts, either Alice or Bob can broadcast it. So maybe Alice is on vacation. That's okay. Bob can broadcast it. Maybe Bob, same thing. Alice can broadcast it. And the great thing about it is that all the other transactions, they remain invalid. Now, there is one edge case here. Of course, refund transactions. So for refund transactions, what actually happens is that's in the case that the Oracle disappears. So if the Oracle, they disappear and they just don't sign an outcome, then there's obviously a refund transaction to make sure both parties can refund the initial amount of funds that they put into the contract in the first place. Cool. So I'm going to show a quick demo just about kind of what we've been working on. This is not technically a live demo, but I actually just did. I just did this. Just recorded on my phone, probably 15 minutes before this. So it is quite recent. So this is actually the Atomic.Finance app. So we've included a little bit about. It allows for users to enter into options contracts. So we're specifically trying to allow for people to make yield on their Bitcoin. And they do this by, creating a covered call. And I can answer some questions about that. But the basic thing about a covered call is you're basically, selling a contract and you earn yield for that. So you say, hey, I'm betting that the Bitcoin price will be above 56,000, for example, in the next 14 days. And if I'm correct on that, then I get, I get a premium. So I get a little bit of Bitcoin for doing so. So you can see we've added a few different kind of risk options. In here, you can see, kind of what are the terms of really the bet that you're making. If Bitcoin is below 56,000 expiry, then you'll receive that much more Bitcoin, and you can kind of see the probability of that. Now, when I actually go and proceed, I can confirm everything involved in that, and then we'll actually get into the DLC part of it. So we've got a market maker on the other end that's kind of providing liquidity for these contracts. But basically the data for the DLCs are being sent back and forth between the different parties. You're going and actually creating the DLC contract. So in our case, it's not as simple as just an election contract. There's not just 2 outcomes. There's actually we need to be able to account for all the possible outcomes that could happen after if it goes above the strike price, for example. So there's actually 5,000 signatures that are being signed in the background here approximately. And so it's just sending those messages back and forth. Since it's actually signing so many signatures, it actually takes a little bit of time. It takes about like 7 seconds or so for each step. And now it's actually broadcasting that funding transaction on chain. And we'll see that's broadcast, in a second. So those messages are just sent back and forth, and then finally the last person actually broadcasts it. And then now that it's complete, you'll see in a second that we'll actually be able to go on chain, and this is a valid on chain transaction. So so you can see it's been broadcast to the chain, 4 sats per byte. Obviously really cheap. It's just a 2 of 2 multisig, and we can click done. That's for a previous transaction I did. But since now you can see that the position that I entered, it was confirmed. At any time, you can go and you can look at the multisig address, and you can just really easily see kind of what's going on with the contract. You can see how the yield is calculated, and you never had to give up. I mean, you never had to give up custody of your Bitcoin. You're just really just putting it into a 2 of 2 multisig at the end of the day. So. Perfect. So we'll move on to the next slide. A little bit of like background on DLC. So DLCs have been worked on for like a little bit of time, actually. The first white paper came out in 2017, and then we actually didn't join until obviously August 2020, but there was a little bit of history where, Shared Bits and Crypto Garage, and even a little bit of work from Blockstream was going on, where, in 2019 of April, the first mainnet DLC was executed. They started working on a thing called DLC Specs actually in December 2019. So that was a collaboration between Shared Bits and Crypto Garage. You can actually look this up. There's the DLC Specs online. It's on GitHub. There's lots of contributions from like independent Bitcoin developers. There's a meeting every month about it. Then, started working on the minimal implementations for reg test and testnet. And then finally, we actually had a little bit of a change that occurred. So in Lightning Network, typically, if something goes wrong in Lightning Network, you usually have revocation that occurs. So if one of the parties cheats, then you can basically steal all the funds in the channel. It was actually similar to this for the first iteration of DLCs. But then there was one of the developers working on it came up with an idea of using a different type of signatures, adapter signatures. They're similar to Schnorr signatures, but just with a tweak involved. And essentially what happened was they came up with the idea of using adapter signatures for this, which would allow for there to be no need for essentially revocation. So, you really only have like very simple paths, either the outcome gets executed or it gets refunded. There's some more working on implementing fee bumping into the specs. We worked on the on-chain DLCs for the elections in October. We worked on a few things in May 2021 to actually allow for all the possible curves. So now in the spec, it's not just as simple as like just doing an election, like, one outcome or for the other. You can do all types of like different contracts. You can create a stable coin with it. You can create options contracts. You can create futures, anything that has like a payout curve. You can now do that. And then of course, in July 2021, the Atomic beta and also Shared Bits released their Bitcoin S wallet client into the wild. So definitely lots of development to be done, but some good progress so far. The next step for us is actually right now in DLCs, you can't, if you've entered a DLC, you can't close, you can't close it early. So just some new protocol work to allow for that to happen, for, people to be able to do a cooperative close, as you might see in Lightning Network. And then just some more work on, just kind of within our own app to make it easier for folks to have more data on the type of options that they're actually entering into. There's a lot of different like apps and wallets out there that you can test out. Obviously, our app is currently in kind of waitlist mode right now, but there is also the Bitcoin S wallet. So this is something you can test out today. A lot of people have been testing out the Bitcoin S wallet. It shows you all the different steps involved with actually creating a DLC. So you'll see like the offer, accept, sign process, actually broadcasting it is included in Bitcoin S. And so they've created a really nice wallet for you to be able to test out. You can just go to GitHub and check out Bitcoin S. And then Crypto Garage has also been working on an application. I think they're just working on updating it right now to the adapter signatures version, but that one's called P2P derivatives, and I have that in the resources section at the end as well that you can test out. Awesome. So looking towards the future. So what's next for DLCs? One of the big things that a lot of people have been asking us about is, I'm entering into these DLCs, and obviously you saw the DLC that I entered today. It's only 4 sats per byte, so obviously really cheap. But as soon as we start getting into any type of bull market, that's going to skyrocket really quickly. A lot of people have been asking us, when are these going to be available on Lightning? When can I have cheaper transaction for DLCs? So we've been looking at obviously for Lightning DLCs. Now that Taproot is going to be implemented into Bitcoin, that allows for kind of a roadmap to move towards enabling Lightning DLCs. A lot of different things need to be rewritten in the Lightning network to allow for Lightning DLCs, but that's definitely on the roadmap. Liquid DLCs, that's another thing that a lot of people have been interested in, allowing for people just to peg into the sidechain, and then if they're doing a small bet here and there, just be able to do a liquid DLC and bet on a particular outcome, and then obviously exit and go back on chain. And lastly, an actual DLC P2P network. We've got our own kind of private network going over IRC, but it'd be great if you could say, once we have Lightning DLCs, for example, if you could have a P2P network to allow for parties to kind of agree on the various terms of a DLC, over that network. A few resources, obviously, definitely recommend checking out the DLC white paper. We've got our blog. SuredBits has a great blog that has a lot of great explainers about all the different components involved with DLCs. Crypto Garage has a great blog as well talking about that. Obviously, the DLC specification, that's available on GitHub as well. And then obviously the SuredBits Oracle you can check out online as well. And it's just oracle.suredbits.com, I think it is. But yeah, that's about it for me. Thank you for the time, and I'm sure there's lots of questions. So.
Really short and sweet. Great presentation. I think people understood the new concept, so I'm pretty sure there will be some question in the crowd. Any question, guys? I can start with one question. So about the single oracle. So for now, you can only plug in one oracle. And you said that maybe in the future it's going to be possible to have few and have like an aggregation of decision between a set of oracles. So does it depend on a certain type of, I read that you need like cross-input aggregation, but then you will need a soft fork for this. Can you explain more about the problem with that, or?
Yeah, you don't actually need Nadav from SuredBits has actually been working on this, and you don't actually need any type of soft fork for this. What you can actually do for enabling this is there's actually already a contract specification, and I believe they've already actually executed a multi-oracle solution. I believe it's actually built into Bitcoin S. So what's actually required there is in one of the previous slides, I showed an example of, you've got an announcement that exists from like SuredBits, for example, and then you would take that announcement and you would use it in your DLC. What would need to occur for enabling this for multi-oracles, you would need to have multiple oracles, obviously, creating that announcement at the same time. And then what you do is you take the signatures from each of them. So you take the nonces from each of those, and essentially unfortunately, it dramatically increases the number of signatures that need to be created for each DLC. So, for example, say I have 3 oracles. I have SuredBits, Crypto Garage, and Atomic.Finance, for example. What I would need to do is create all the possible outcomes that would exist. So I would do it for like Atomic.Finance and Crypto Garage if I want to do a 2 of 3. So I would create all the signatures for that one. I would then create all the signatures for SuredBits and Crypto Garage. And then finally, I would do Atomic.Finance and Crypto Garage. So it dramatically increases the number of signatures you need to create for each of those possible outcomes. And then I believe there's a small tweak that's included in that as well that allows for that to be possible. But I would definitely recommend reading up on the SuredBits blog on what they've done so far with the multi-oracle solution. I haven't been working with that too much yet. But I know that they've already broadcast a multi-oracle DLC so far.
Okay, then that's great to know.
I got a question, Matt. Great presentation, by the way. Who selects or how is the oracle selected?
Yeah, absolutely. So really, like in any DLC contract, that's really up to the user. In our particular app, obviously, like we use shared bits by default, but anyone who builds an application on top of DLCs, it's really up to either, the builder of the application or, whoever is creating that DLC to decide what Oracle they want to use. We've talked a little bit about like, should there be some type of like reputation associated with each Oracle, to determine which one should be chosen. And there's been some discussion about that. So far, it's kind of been like, hey, let's build reputation around a particular Oracle, and then either users can choose or the end application will choose like kind of what Oracle gets used. But and then usually the other thing that you do as well is for each client. So we've been building kind of we call it a DLC daemon. It's kind of like the L&D essentially for DLCs. But we have a way to allow for you to like blacklist and whitelist particular oracles. So say, for example, I receive a message in and it's, from an oracle that I haven't whitelisted, then it, I'll automatically not accept that contract. So it's really up to the end user. Yeah. Great question.
We have another question from the crowd. Just a second.
How do you think this technology will impact online gaming? And second question is, can I use this for my fantasy football league?
That's a great question. For online gaming, I guess it would really depend on the size of transactions. So, right now we're dealing with on-chain DLCs. And so, if you're doing online gaming and, you're betting on $5, $5-10 here and there, it's probably not worth it to go and create a DLC. Just because it's, it's going to be too expensive. Maybe in the future with Lightning DLCs, that would make sense. You can just do small bets here and there. For fantasy football, I think that's what you said, right? So for anything related to like kind of betting, essentially, is that I think like if you're betting on larger amounts, like say if you're betting 0.1 Bitcoin or 0.05 Bitcoin, I think you could it's pretty easy to set up actually for that kind of application, because it's either one, I'm assuming you do either one team wins or another one wins, and you can create an outcome for that. If you want to have a type of pooled application, I think that's a little bit harder. So if you say, people want to enter on the fly, and then I think basically the challenge that you run into is matching the parties up. So you have coincidence of wants problems, which would probably mean that you would need some type of market maker. But you could definitely do it if it's just one outcome or the another, and you have the probability kind of in place.
I have another question. I tried the app, and it was great. I'm not like a trader of options myself, so but I found it really nice. I'm more of a holder. Was there any reason why the threshold or like the minimum amount you will have to invest was like 0.1 Bitcoin? Is there any reason or?
Yeah, so the reason for that is essentially it has to do with the way we've set things up with the market maker right now. So essentially, like our market maker is obviously accepting these contracts in, so the users are kind of selling these options, and then obviously the market maker is buying them. And then in order to hedge, the market maker is actually going to an external options exchange and actually hedging on there by selling. And so it turns out that the minimum contract size for just Bitcoin options in general is 0.1 BTC. So just to make it easy for our market maker to be able to hedge is why we set it at 0.1 initially. Down the line, that might change. If we're able to find a different way to be able to hedge effectively. But yeah, that'll probably be like the default for the near future.
Matt, how did you land on the Atomic.Finance yield proposition? How did you land on covered calls? As a solution specifically.
Yeah, we noticed that there were a lot of parties. Actually, to be honest, it was I don't know if you guys saw like on Twitter there was Dan Held was kind of tweeting about a few things about different yield strategies on Bitcoin. He talked about BlockFi. He talked about kind of all these different solutions. One of the things he talked about was actually selling covered calls to be able to make yield, on his Bitcoin. And so, obviously seeing that, we thought that was a really, really interesting idea. And it just so happened that kind of the DLCs were getting to the stage where something like covered calls would be possible to implement, and it also fit very natively into kind of what was required for DLCs. So if you do a DLC covered call, it's obviously priced in Bitcoin. And so you actually don't need any type of like liquidation mechanism if it's fully covered, for example. So it was just a really easy contract for us to be able to test out, and we saw a lot of Bitcoiners kind of talking about it from Dan Held's tweets. So yeah.
I'm assuming if I set up a DLC with another party, I have to pay some kind of fee to the Oracle, and if so, how is this fee fixed?
Yeah, that's a great question actually. So far there's nothing built in right now for the Oracle fee, although obviously we've been chatting about what that's going to look like. I suspect that it's going to really depend on how it's set up in the future. Like one way we've looked at setting it up is basically you might be set up over Lightning, and maybe you do a request to the Oracle to say, hey, I want to get the attestment for this particular Oracle announcement that has happened, and then obviously the Oracle will automatically go and sign that. I think that's actually how SureBits is thinking of setting up their Oracle moving forward. One of the big questions with that though is that if you do a Lightning payment to ask the Oracle for the attestment, and for them to actually go and sign it, one of the big questions is should that be available to everybody then? So one person pays, and then obviously everyone benefits from it. So that's one of the things that kind of hasn't been decided. I suspect that that's what will actually happen, or that it will be your users can request it themselves, but most likely, like say if you're using the Atomic.Finance app, like we'll cover the cost of obviously paying SureBits to attest to that Oracle announcement. But yeah, that's still an ongoing discussion right now. Great question.
Yeah, I got another question for you. Do you plan on filtering, let's say, what people can create those bets on? If there's something that's just too contentious, for instance, one day the news comes out and the Oracle deems one party won, but a week later that news has been deemed inaccurate or false. Has this? I imagine there's been some thought process behind that. Just want to hear you speak about that.
Yeah, absolutely. So as of right now, so for the Atomic.Finance app right now, everything is just attesting to particular Bitcoin prices. So obviously that's fairly final and fairly kind of obvious what the outcome is. This was actually a point of discussion for the for Atomic Odds when we were allowing people to bet on the election using DLCs, because obviously there's big discussion. Oh, did Joe Biden win, or is Donald Trump going to bring it to court? And so our solution to that was obviously essentially just to wait and see, wait as long as possible until there was absolute certainty. I can't remember exactly what the terms were, but we waited a long time essentially to actually go and attest to the particular outcomes in that instance. But yeah, right now in the DLC protocol, there is kind of no, it's basically final. Like when the Oracle attests to a particular announcement, that is final. There is no going back and saying, oh, this should have happened differently. And so it's really up to the Oracle to make 100% certain that the announcement that they're attesting to, is the correct attestment. And obviously, I think the best thing to do in that instance is to wait a little bit of time. It's better to wait and be right about it than jump the gun and be early in the current protocol. So yeah.
Nice. Thanks for that.
I have another question. What is the current state of the beta program of your app? Are you still looking for beta testers? Is there any way, for example, the attendees that are interested trying the app can do it?
Yeah, absolutely. So we have a lot of, so right now we're kind of at the stage where we've just been really testing it out with a few folks here and there, and we're just trying to get a lot of feedback. And we have quite a few people on our wait list, but obviously if you'd love to test out the app, we'd love to have you as well. So you can go to our website, Atomic.Finance, and you can sign up for the wait list there. I think the wait list is quite long right now, and obviously we're trying to get things pushed out as quickly as possible so we can open that up. But definitely if you're interested in testing it out and providing feedback, definitely check out the waitlist on our website. right now we're looking at getting kind of to open beta in the next couple months, but no kind of official release date just yet.
Great. Another question. Is it going to be available to any country? Is there like regulation for that, or is your plan according to?
Yeah, great question. So obviously, kind of our view on the space and kind of what we're building and kind of the advice we've got from lawyers as well is that obviously we're a software provider, so we're building software that allows for people to use Bitcoin tools just like as you would a Bitcoin wallet. We've got a terms of use, so obviously double check our terms of use and make sure that you comply. So it's obviously up to the user to make sure that they comply in their own jurisdiction for the software that we're providing. And so that's kind of our legal take on the situation. Obviously, if there are any developments moving forward, things may change. But that's kind of what the app is looking like currently. It's really it's a software wallet that you can use to as a tool to build transactions on the Bitcoin blockchain. And well, obviously we'll keep updating if there are any changes to that, based on regulations changing in the future.
So is it just Canada? No, I think he said that it's available everywhere, but you should check with your own jurisdiction if you can use it or not. So is that right?
Exactly. Obviously anyone can download the software, but it's up to the user to double check that they're okay to use it in their own jurisdiction. Yeah.
Desktop and mobile, everything, every platform?
Is it mobile? Only mobile for now?
Yeah, it is only mobile right now and only on iOS. We're working on getting Android down the line, but it'll initially just be on iOS. Yeah.
I maybe have a last question. If you could describe the craziest vision you have for DLC, but also Atomic.Finance and yourself, what could you say?
The craziest vision for Atomic.Finance and DLCs. I think Lightning DLCs are going to be insane whenever every person can go and. I think we're excited really to just allow for tons of financial tools for Bitcoiners to be able to use for DLCs. Anything from Bitcoin backed loans to options contracts to futures to doing a 2x position. I think we have a big vision for what's possible for there. For the majority of what you see in Ethereum DeFi, minus the shitcoinery, being possible to create using DLCs directly on Bitcoin and a Bitcoin culture fit, I think that would be beautiful, and then lots of different types of just people instead of going and using tools that require you to give custody away of your Bitcoin to this company or this company to go make yield on it, just building a way for people to be able to do that themselves without giving up custody of their Bitcoin. I think that's kind of the big vision that we have that we're trying to build. Yeah.
That'll be amazing. I'm sure it will happen.
100%. We don't want a Bitcoin walled garden future.
So thank you so much for your presentation, your energy. A little round of applause for Matthew, please.
Awesome. Yeah. Thank you so much for having me, guys.
And yeah, Matthew, I hope we can see each other at some point because we're not that far, We cannot make it to the barbecue tomorrow. We already have 200 attendees, but next time I hope we see you in person.
Absolutely. We'll definitely plan for next time, Tristan. Appreciate it.
Perfect. Thank you. Have a great weekend.
Awesome. You too. Take care, guys.
Okay, perfect. So that wraps up the last presentation of the Bitcoin Summer, but we have a little presentation still with John from Coinbeast. They're also from Montreal, so since they were there and also participants, I wanted to present their project. It's not going to be too long. Do you want me to show the website?
Sure, that'd be,
yeah.
That'd be great.
Okay, we're doing this. That's it. Can we show the screen?
Beautiful,
Oh,
yeah.
yeah, perfect.
All right. How's everyone doing? Friday afternoon. Oh, for the live, that's right. Sorry. Okay, cool. Okay, well, thank you for having me today and let me speak here. So my journey into Bitcoin is a little unconventional. I'm not a developer. I'm not an economist. I actually come from education, so I'm a teacher by profession. Fell through the rabbit hole in 2016 and decided last year, how could I add value to the space? So my partners and I, we got together and we did some brainstorming. And what we realized is there was a lot of great content out there for people to learn about Bitcoin. But I came across, anyone have heard the Bitcoin Money by Bitcoin Rabbi?
Yeah.
It's actually a children's book on Bitcoin, but obviously also a great book for grown-ups who are learning about it. Basically, it's a story, right? Made up story about this kid that lives in Bitville, and they eventually decide to use Bitcoin as a currency. And that's when I kind of had my light bulb moment of what was lacking in the space. Obviously, people coming into the space, like Bitcoin can be really overwhelming sometimes. It can get really technical. But our mission is adoption through education. So ultimately, people need to really understand why Bitcoin is important, why the world needs Bitcoin more than ever right now. Aside from price and speculation and number go up, more important than that for us is really understanding the revolution, why it's happening all over the world, and why the network is probably more important than the price itself. So that's where we got started. We started off really, creating blogs about all kinds of different topics on Bitcoin. And then, of course, are you able to, I can scroll down, eh? Yeah, here we go. So these are some of the posts that we put up regularly. And then we also have like reviews on different wallets and exchanges in the space. Actually, I'm going to get to that over here. Oh, we're almost at... we'll be at 50,000 by the end of this presentation. So these are some of the exchanges we review. Just again, explain to people what some of the trade-offs are. And then, of course, wallets. So mobile wallets, hardware wallets. Just helping people navigate. But what we really got excited about is the service that we launched in February. We'll talk about that. This is what I want to get to. Where's my mouse? There we go. Okay. So, it's early days when Bitcoin is not being taught in kindergarten, right? So our mission is to get every kindergarten class talking about Bitcoin. And that's also kind of where we started. We said, like financial literacy, and again, I come from education, so I've been talking about this for years, like financial literacy is what's really lacking in our education system. We're not taught how to save our money. We're not taught how to invest. I learned all these things much later on in life. And of course, imagine if kids knew about Bitcoin, if this was being taught in schools, which is, that's kind of our long-term vision of where this should go. But right now, we're building this parallel universe, and people need to learn about Bitcoin. So we launched Coinbase Connect, which basically allows users to connect one-on-one with different pros in the space and really talk about anything they want. So you're really like personalizing your learning experience. So just to give an example of what this looks like. So these are some of the pros that we have on the platform right now. So basically, every pro kind of has their area of specialty. So for example, how many of you were here for Adam O's presentation yesterday on mining with Upstream? Nice. Yeah, so he's one of our mining consultants. So a lot of people who want to learn more about mining or might have access to cheap energy and want to learn how to get started, they'll book a call with him. So we just learned about DLCs. Ben the Carman
very famous in the space for he works with a company called Sherbets, also working on DLCs, also extremely knowledgeable on Lightning. So that's kind of his area. D++, maybe some of you are familiar with her. She's on Clubhouse a lot. Also, amazing teacher when it comes to multi-sig, how to run your own node. I think I mentioned the other day about PlebNet. She's actually one of the people who started PlebNet, which is a Telegram group basically on Lightning. So anything you want to learn about Lightning, free content, you get to talk to people that are using it. So that's definitely a great resource. I think some of you know Jonathan, right? From Montreal. And and the list goes on. So really, and we also have people, we have, for example, a lawyer on the platform who specializes in crypto, but also like tax and compliance. So for example, if you're running a Bitcoin company and you want to understand, okay, how do I do accounting for this? What are the tax implications? Because again, if you go to your regular accountant or a regular lawyer, they're not going to know what to do, right? So this is still very new for a lot of people, and we're still trying to figure out how do we make this work. So that's what Coinbase Connect looks like. Also, we started putting together some rooms on Clubhouse. So we get together once a week, and we try to bring in like really high quality content, different guests from the space, different topics. So for example, a few weeks ago, we had a trivia night, and we basically gave out sats as prizes. So that was a lot of fun. We had an international room where different people came in from different parts of the world, talk about Bitcoin's use case. For example, we had some people from Lebanon talking about the situation there and why Bitcoin is, basically a very important solution there right now. Last week, we basically looked at the book of Satoshi. We did some readings on some of Satoshi's original interactions with different people, and we learned all about that. So we try to keep it fun. We try to keep it interesting. Like I said, our goal is really to educate people all over the world about Bitcoin. We're always looking for talented writers, people who are passionate about writing and want to write about Bitcoin. We're also currently looking for, if anyone has experience with Shopify, OpenNode, give us a call, because we're definitely looking. We have a couple of things on the roadmap that we're looking to unleash. But right now, we're just happy to be in the space, working with companies and collaborating with companies like Bull Bitcoin, Swan Bitcoin. And it's just such an exciting time to be in Bitcoin. And if you have any questions, I'll be more than happy to answer. Thank you. Was I away from the camera? Oh, okay, cool. Okay, I saw that. Yeah.
How do you go about choosing your consultants? Do they just apply and you work with them and then decide you can pick them up for whatever they're good at?
Yeah, so that's a great question. Obviously, when we first started, we kind of had a list of things we wanted to offer. So we were really looking for variety and people that really specialize in certain areas. It's crazy. Like, I get emails all the time, oh, I'm an expert in this. And then you start doing some research and you realize, they're not really an expert. Also, we get emails all the time for different companies that want to partner up with us, cryptocurrency companies, right? And that's a decision we made right from the start. Although there's a lot of great resources, we said we're going to be a Bitcoin company, and that has to be very clear from the start. So anybody we work with needs to be a Bitcoiner. No disrespect to other companies, but we're not going to start talking about altcoins. And obviously, one of the important things that we do is explaining to especially beginners what's the difference between Bitcoin and every other cryptocurrency, because I think that's a very important aspect that people need to understand. But we're a Bitcoin company, so we could have partnered up with 1 million companies and maybe sold some advertising space on our site, but that's not what we're about. So it's the same thing, the people we work with, the pros, we want that's number one. They have to be Bitcoiners. Yeah.
Based out of Montreal?
We're based out of Montreal, but as you can see, our pros are from all over. Our artist is from Australia. One of my partners is from the US, so we're like Bitcoin, we're global. Decentralized, exactly. But yeah, we're based out of Montreal.
And you talked about how you have a passion for education, that was your background.
That's right.
What exactly are you interested in doing with like maybe kindergartens? Because you mentioned that. Did you have any plans with that for education and for like really young kids?
Yeah, so the problem with public education is they're kind of like banks. They move very slowly. So I think logically it would start probably at the university level and then would kind of trickle down, right? So some universities, like I've seen some universities offer courses on cryptocurrency and blockchain, not specifically Bitcoin. I think that's coming with time. But I think it'll trickle down, university, then maybe college, high school, maybe as like an entrepreneurship course, and then hopefully one day kids in elementary school can learn about this, because I think it's so important. Like it comes back to fix the money, fix the world. If people understand money and how it affects everything else, it would. I think it's that's what's kind of lacking right now in the education system. And like I said, we only really find out about these things much later on in life. And then you still have people who are grown up and are, still don't understand like what money is and how all this works. So I think hopefully, we can start at the university level, and then eventually, kindergartens, literally kindergartens, will be learning about Bitcoin. That's our dream.
Partnership between us, so maybe we should talk later after that.
Let's do dinner.
So thank you for being there and presenting.
Awesome, thank you so much.
Yeah, thank you.
Thanks, guys.
Okay. So I think. So guys, this is the end of all the conferences, and it was really amazing week so far. We're really happy to have organized that, and I think people are pretty satisfied of the week, and I hope you learn a lot, and I hope that it will serve you as a inspiration for the future, for Bitcoin, for yourself, for everything, for your family. And it wouldn't be possible if we hadn't like such a nice community in Montreal. Like the Bitcoin community is like really old in Montreal, like compared to other cities. And so like a little bit like Francis was explaining the other day with the Bitcoin scarcity that is emergent. I think that particular Bitcoin summer also emerged because we just had the idea like not even a month ago. And we're able to organize such a great event, and also thanks to Pierre, like really great live stream, such quality. So I think he deserves a little round of applause. So I hope we're gonna do more and more this kind of events in the future if the government permits us. Maybe we're gonna have to hide in caves in the future to teach about Bitcoin. We don't know. But it's not the end. It's not the end. We still have 2 events. One of them is not. Oh wow. Okay. So tomorrow, the biggest event of them all, and that was not a clickbait. That was real, because we have right now 214 attendees. So we're gonna have a lot of steaks, a lot of sausages, a lot of meat, and also vegetables. Don't worry for. We don't discriminate. And lots of beer. It's a free event. Invite everybody. If the SWAT or the police comes in, it's going to be great advertisement. So you should all come. I hope I'll see you there. And that's going to be like the big closure moment. But Sunday, we're also going to have a Bitcoin hike. So we actually bought a giant Bitcoin flag for this event. We're gonna climb up the Mont Royal with some Bitcoin swag and just like wave it around and take pictures. And it's also gonna be like a way to to do like a sport activity, not just drinking like we did all week. So, so yeah, it was really amazing, and I really thank you for being there. And yeah, I hope Bitcoin will still go. Well, number go up, right? So everything is good. Thank you. So thank you, and that's it. That's the end. Thank you. See you tomorrow.